Connection lost.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
City.
In London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
We've got a ton to figure out in this market. From New York City this morning, good morning. Futures positive, up 0.75% on the S&P. We bounced back on the Nasdaq, up 0.9%. The moves in the bond market yesterday, though. Let's pause. Switch on the board. 2s, 10s on the US curve, 2s, 10s on the German curve. Yesterday, 10s in America, down almost 10 basis points. Big move, right? Try 20 in Germany. Try almost 30 in the UK. As we really price out the potential for a rate hike at the ECB, Tom, your 10-year yield up 5 basis points this morning, bouncing back, but back to negative 70 rather on a 2-year, not a 10.
John, explain the United Kingdom move. That stunned me to see a 30 basis point, 0.3 percentage point move. Why did that happen?
Huge dislocation, a market completely caught off guard, Tom. Wrong-sided move, all of the above. Price out rate hikes of the ECB, the Bank of England, the Federal Reserve. That was the move yesterday, Tom. I have no idea if that will be the story in the next several months.
Yeah, fair.
Because, Lisa, you've got to assume that given the inflation data we're going to see in the next few months, things will get uncomfortable for these central banks.
Well, that's the reason why when you were focusing earlier on the front end, the idea of 2-year yields, that's really where to look. Longer term, this feeds into the whole stagflation type of discussion that we're having about Europe, and it's understandable that they think they're going to have to drop it back down. On the front end, it's a lot less certain.
2s right now in America, 140. Remember last week on Friday, the high of the session north of 160. 175 on 10s. We were at 2% last Friday. So we've seen some major moves here across the curve in America and beyond in Europe and elsewhere. Switch on the board and get to crude. That's your main story, your headline, isn't it? Through 110, through 111, through 112, through 113 briefly on Brent. 110.47 right now at more than 5%. And Lisa, you and I have gone back and forth on this. This market isn't facing sanctions right now. but it's facing sanctions right now because so many people are pulling back.
No one's going to touch this. I mean, you've got the financial channels that are all question marked, but also you've got the social pressure to every company out there, whether it's a refiner, whether it's a shipper or an oil major. Why are you doing business with a nation that's invading Ukraine?
And seemingly Exxon, BP, Shell have made that decision to make a move. Brent 110.36, WTI 108.37.
I want to mention ruble as well, up to 122 for a cup of coffee, coming back down, but still significantly elevated over the last 24 hours. 112 rounded up on a Russian ruble as we speak against the dollar. And now on our politics, and particularly the path forward for very much his Democratic Party. Howard Dean is with us. He is a former presidential candidate. Dr. Dean is chair of the Democratic National Committee and has skied every black diamond at Killington, Vermont. We welcome him this morning.
Great introduction.
Yeah, well, I want to go away from the normal political talk, Howard, and I want to ask you a difficult question. You and I grew up with John Stennis. We grew up with Democratic Southern senators. We're in a war. We have a wartime president. How does the Democratic Party get the military back?
I'm not worried. I think we have the military back. I think the vast majority of military people do not believe we should live in a fascist society. And I think the leadership of the military is doing a great job. I thought they did a great job resisting Trump. It's craziness. So I'm not the least bit worried about the military. I'm worried about the people who are driving around in trucks and clogging up the works and talking about neo-Nazi ideology on the floor of Congress.
How does the Democratic Party, and particularly newer candidates coming on in the quarters, maybe in the coming years, how do they fight off these autocratic tendencies? How do the Democrats coalesce around a middle message?
Well, that's the key question. Look, I think they re-message. I thought Biden, whatever you happen to think about this particular issue, I thought one of the great lines in Biden's speech last night was, we don't want to defund the police. We want to fund the police. And what he means by that is we do need police reform. Absolutely. But Eric Adams is mayor today in New York City because most of the people in the community that voted for him most enthusiastically, which is particularly black immigrants, do not want to defund the police. So I think Biden hit all the high notes yesterday. As we were joking around before the program, I think people have low expectations. I thought it was one of the best State of the Union addresses that I've seen in the last 20 years.
Howard, he hit all the...
Go ahead.
Excuse me. I apologize for interrupting. You were saying he hit all the high points, and he did, of the Democratic Party and what he wants to sort of push forward in his agenda. But right now, there is one conversation that is dominating American families, and it is inflation. It is what they spend when they go to the store. It is only exacerbated by the Russian invasion of Ukraine with gas prices. And yet the message has been, keep going with some of these plans, and eventually it'll work its way out. Do you think that the Democratic Party needs to go further with respect to supporting national domestic oil producers and refiners to try to give them more support to increase the domestic production to isolate Russia?
No, the problem is not domestic production. We actually, as you well know, in this country produce more oil than we use. The problem is it gets sent all over in the world market. We're probably going to have to figure out a way to keep that here. Look, we've been practicing modern monetary theory, whether you like it or not, for the last 15 years. The Republicans, who probably don't know what modern monetary theory is, have been practicing it big time. Run the deficit up as high as you possibly like. Well, when you do that, and what modern monetary theory says is that inflation is the problem, and that is what we're hitting now. We're going to have to raise interest rates, and there's no nice way to say this. But the oil market, this is all short-term stuff. And I think trying to tackle the oil market and bring oil prices down by doing anything other than removing oil from the reserves and putting that in the market is silly. Well, but we're not going to drill our way out of this.
And that seems to be one line that the party seems to be taking. You have other members of the Democratic Party, including Joe Manchin of West Virginia, coming out and saying, actually, this was the way that we need to go. I'm just wondering if there are other concrete steps to take so that some of these shocks, because the price increase that we've seen in oil has been a shock. The price increase that we've seen in wheat is increasingly becoming a shock. These are major issues for the global economy. At what point do you have to say we have to take an immediate reaction to this?
we are taking an immediate reaction. Look, there is a war going on, and the war is being conducted by one of the biggest oil powers in the world against one of the biggest grain producers in the world. What do you expect? The solution to this is to deal with Putin. And I think Biden's doing a great job doing that.
Governor Dean, the junior senator from Vermont is 80. He will enjoy his 81st birthday here in September. The Democrats are about to lose this, that, and something else in Washington. I'll let you and the experts decide what it is. How far has Senator Sanders and the liberals overreached?
Look, I think the biggest problem with the so-called left is not that they're wrong. It's that they can't get their messaging straight. And one of the interesting things is this debate over Medicare for all. We should have Medicare for all, but we should have Medicare for all who want it. This is the most libertarian country in the face of the earth. And that includes left, right, or center. People don't like to be told what to do. They like to be given their own choices. So we often do the right thing. We need a system of universal health care that works, as our healthcare system is absolutely broken in terms of the way that we spend money and who has to pay for that and suffer as a result. But the fact is, you cannot message a package that alienates a significant portion of American people. And that's our problem. Our problem is not what we don't know what to do. Our problem is we insist, or at least on the left side, which I count myself on many issues. We insist on messaging it in such a way that we hit people over the head with it. And that conveys the message that we're smarter than you are. And that's one of the reasons that people like Trump, who are completely unqualified to be anything, managed to win, because we alienate people we can't alienate. We can't alienate ordinary Americans. We have to stop doing that.
Well, Howard Dean, don't you need a refresh of the senators then? Because there's a lot of senators that speak that way. Wouldn't you agree?
I'm for term limits. I'm for term limits in the United States Senate. I think it's worked well in the presidency, and I think we ought to limit terms to at maximum 3 terms, 6-year terms in the Senate. We ought to limit terms in the House. Look, the political institutions in a democracy are always far behind where the public is. That's the nature of democracy, is that the public runs the place. But there's no organized way for them to do that other than through the political process. When you have a party that doesn't give a damn what happens to the country as long as they are in power and is willing to cheat on the voting and refuse to confirm the president's most basic appointments, that is a democracy that doesn't work. And the way to do that is to limit people's terms so there's no more incentive to do all this gerrymandering and all this crazy stuff, so that the democracy works again. And I've thrown up my hands. I think we need term limits in the worst way, including term limits on the Supreme Court, which is now nothing but a bunch of partisan hacks, as 3 of them themselves have admitted.
Howard, would you have said that if there was a majority for people with more of your views?
I would have said that if you get a Senate that's completely out of touch with where the rest of America is, and when you're having people who are 90 years old running for re-election in Iowa, which is just ridiculous.
We had an 80-year-old Speaker of the House last night, didn't we?
Yes, we did, and I stick to my guns. Term limits are good for everybody, both Democrats and Republicans, and we need them.
Howard Dean, thank you, sir. Good to catch up.
Thank you.
Tons of market action to catch up with as well. Futures up by 0.75% on the S&P. Brent, Tom, 110.65.
It's fascinating, John. I'm looking at the zeitgeist out on Twitter, and it has changed in 48 hours. I mean, the lack of communication coming out of these war zone areas, and that folds into the market, where, would you agree, John, it's almost a flighty market today. It's moving in a very different way than the normal kind of market that we would see.
I just think maximum confusion.
Yeah.
And no real idea how we resolve some of these situations. What's the solution, Lisa? We saw a 20, 30 basis point move on gilts yesterday. Today, another 15 basis point move on BTPs. The Italian 10-year yield is up by 15 this time. It's hard to keep up.
How many people have come on this show and said the sky's the limit for oil prices, or at least proverbially, if we do get some sort of inclusion in the sanctions? Well, in a de facto way, as we've been talking about, we have. So how do people game out that type of oil shock into an economy that's still trying to recover from the pandemic?
That word is the right one. A shock, a commodity shock again. And it's the second one, Lisa.
I know.
In what, a year, 18 months?
Yeah, and there was another oil shock. Remember when it was negative, when futures were negative?
When was that, 2 years ago?
Yeah, 2 years ago. I mean, it's just amazing how whipsawed it's been.
My brain over the last 2 years, I don't know about yours, but it feels like 5, maybe even a decade, I don't know. Crude, WTI, 108.73, up by more than 5%. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rosika Gupta. Western military officials warn that Russia's invasion of Ukraine is entering a new phase. They say it will be a more deadly time for the country's civilians and its army. Early signs are that Russian commanders are abandoning the approach of lightning strikes into cities. Meanwhile, Russia says it has captured the port of Kherson on the Black Sea. Ukraine's government didn't confirm that, but had said that Russian forces were advancing in on the city. And some blunt words from the chairman of Fortescue Metals, Andrew Forrest, told Bloomberg that CEOs with operations in Russia need to pull out now.
I would say to all my fellow chief executives and chairmen around the world and major shareholders, if you're making $1 from Russia right now, I'd call it blood money.
Forrest said that the rest of the world needs to stop what he calls the breach of mortality. In his State of the Union address, President Biden vowed to confront Russia over the invasion of Ukraine. He warned Vladimir Putin that the war would leave his country weaker and more isolated. The president also said that his top priority would be to fight rising prices. And the world's airlines expect to see passenger numbers exceed pre-pandemic levels by 2024. That's according to the International Air Transport Association. The trade group says that air travel in North America is likely to reach full recovery by next year. And it's a new approach for American movie theaters. AMC Entertainment will charge patrons more to see the new Batman film than for other movies scheduled at that time. For example, an AMC theater in Los Angeles is charging $19.99 for a Thursday night showing of Batman, while tickets for other films are $1.50 cheaper. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Rosika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Tonight, I can announce the United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. These steps will help blunt gas prices here at home, but I know news about what's happening can seem alarming to all Americans. But I want you to know we're going to be okay.
The President of the United States, if only we had a live price of crude. As he was saying those words, crude yesterday up 4%, crude today up 6%. Brent at 111, WTI close to 110. This was the story from the team here at Bloomberg on Trafigura, oil trading giant, offered to sell a cargo of the Russian grade of crude, $18.60 below benchmark prices. Steepest, deepest discount ever. Still drew no bids. That's the story at the moment, Lisa. This headline dropping from Shell as well. I'll bring you the story from our team led by Laura Hurst. Shell is continuing to purchase oil and gas from Russia in the wake of the country's invasion of Ukraine. That's according to a person briefed on the matter. But Lisa, the fact you have to write that story, do that reporting, tells you everything you need to know right now. We're unsure just how much crude supply out of Russia, gas supply out of Russia, commodity supplies out of Russia will be disrupted by what we're seeing play out.
Yeah, and the natural path of the trajectory here is to cut their ties with Russia. I will say, though, the story goes on to say that the company is in discussion with governments and will comply with any changes in regulations. So at what point do you get some sort of formalization of the de facto sanctions that we're seeing put into place?
And that, Lisa, is why people are worried. Tom, will you comply with changes in regulation? Yes. But if you enter a deal to take Russian crude now, and then somebody announces something further down the road, you're caught with some sanctioned Russian crude.
And what are you going to do with it? Where are you going to move it? Are you going to move it across the Black Sea right now with Mr. Erdogan holding up the Bosphorus? These are complex things. There's no other way to put it. I'm looking at a gallon of gas in the United States. I don't have a quote on March 1. I don't have a quote on March 2, but I'm at 362 gallon, up 70-some% since the election of, 18 months ago, whatever it is. Right now on oil, and she is truly expert on Saudi Arabia. Ellen Wall joins us, senior fellow, Atlantic Council. Ellen, you talk in your book about Saudi as masters of their own commodity. Really quite a statement. How will they respond to Vladimir Putin?
Yeah, this is the big question for OPEC today as they get ready to meet. What exactly are they planning to do with oil prices up near $110 a barrel? This is a very different situation that we're seeing this month from last month, and yet it seems as though they are just continuing with their current assessment of the market, which is that the market isn't all that undersupplied, and that the geopolitical situation is what is pushing prices up. And so it seems unlikely that they're going to alter their strategy, at least for the coming month.
Who is the they of Riyadh? Is it a team of oil experts advising the Crown Prince or the King? Is this run directly off the Crown Prince's desk? I don't understand when a pro like you says they. Who is the they of Riyadh?
So I would say it's definitely the oil ministry, which is run right now, though, by the Crown Prince's half-brother, Abdulaziz bin Salman, and he's really, quite knowledgeable about the oil market and has been doing this for practically his entire life. But at the same time, it's definitely a close coordination, and we did see a phone call between MBS and the president of France, where he basically reiterated the same line that Saudi.
I think we lost the line there with Ellen Wald there of Atlantic Council. I mean, I can't hear her. Maybe Lisa can hear her. Maybe Tom can, but I can't.
I hear her out in the ether. No,
we can talk about what's happening in the oil market, though, Lisa. The disruption we're seeing, perhaps unintended consequences of what was announced last weekend. But that's the shock we're facing at the moment. And if you remember the Goldman note from earlier this week, when Jeff Carey and the team came out after the weekend and said 1 month price target now 115, was 95. And do you remember that line in the research, a couple of paragraphs down, that the only stabilizing mechanism left for the crude market was demand destruction? Now, Mohamed Al-Erin talked about this yesterday. If we've lost policy flexibility at central banks, is that a good thing? Can you really take comfort in the idea of reducing highly complex issues just down to a question as to whether the Fed will hike or not, and take comfort from the idea that they'll hike fewer times this year than you expected? Losing policy flexibility in an environment like this one, Lisa, is not a good thing.
Especially because people are so unused to it. And we see the incredible volatility as people deal with this uncertainty, not only on the economic front, but on the idea that all of a sudden the Fed put, the ECB put, doesn't work anymore because it doesn't necessarily affect these inputs. I mean, if you have a situation where you get crude to a level where people stop buying it as much, they start restricting their activity, what does the Fed do with that? You've got a weakening economy.
They can't ease. They can't ease, that's
exactly.
for sure. And that's what we face in Europe, Tom. A situation where growth could decelerate, inflation could pick up, and an ECB stuck between a rock and a hard place.
I think we get back to first principle economics. I mean, we'll hear that from Lawrence Summers and David Folkers-Landau later this morning, John. It's real simple. You get normal microeconomics, income and substitution effects, except there's nothing to substitute to, and that's wrapped in Russia around a dearth of currency, much like you saw with Deutsche Mark a zillion years ago. These are going to be normal, basic sanction and war events, and they lead, just as you've talked about, John, to a supply-demand dynamics that aren't normal.
So there's a big currency story here too, and we'll catch up with David Folkers-Landau of Deutsche Bank. Tom, I know you're excited about that in about 90 minutes' time. Deutsche Bank this morning writing the following on this negative correlation between crude higher and the euro weaker. Listen to this. Euro-dollar depreciation on the back of Ukraine's crisis is now starting to inflict damage on the eurozone. The ECB needs to start thinking about ways to stop this. The more oil and natural gas push higher, the more the euro drops. Lisa, it ends with this line: a vicious inflationary spiral. The call from Deutsche Bank, essentially, this ECB needs to do something about this euro heading down towards 110.
And this is the new idea in currency markets. For so many years, we were talking about the race to the bottom, currency wars, to try to depreciate in order to get some sort of competitive advantage. And now it's the opposite. Now you have regions, particularly Europe, saying, wow, the more that the euro declines, the more inflation will be importing from elsewhere, especially as we try to get away from Russia and move to the U.S. for crude, for wheat, for other resources that some of these regions supplied.
Euro-dollar 110.92, and just getting a headline, Tom, from the Ukrainian president's office. Here's the line for you, TK. Russia talks may happen today. They may happen today, according to the Ukrainian president's office this morning.
They will, and I would emphasize, as I said before, John, that we're in somewhat of a news video gossip blackout from Ukraine. I'm not sure we really know what's going on in the major cities, and particularly down by the Black Sea. There's just a huge dearth of information there. John, on the intervention story, it's real simple. I've got a fancy Bloomberg chart up here that would make Folkers-Landau smile. And this is not the DFL moment of 85 cents of 12 years ago. Maybe it's a 105, a 106 is where you get into euro tension.
We'll catch up with Deutsche Bank a little bit later this morning. That headline from the Ukrainian president's office: Russia talks may happen today. Futures up 0.7% on the S&P from New York on TV and radio. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
The contagion channels for Russia now are heightened global uncertainty and commodities.
This could just exacerbate inflation, exacerbate supply chain woes.
The inflation here is broad-based and becoming sticky.
I think we're all trying to figure out what's going on now.
This looks like this is going to be a rupture that lasts for years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Big moves in this market from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up 0.6% this morning. TK, the move in crude through 110 on Brent.
Moving crude and now moving ever higher. Really in the last hour and a half, John, a move from a 109 level. We're going to get up through 112. High for the morning, 113.
The headline from the Ukrainian president's office just moments ago, Tom. The Russia talks may happen today. The objectives of those talks, Tom, something we have to revisit every single time we see those headlines.
We'll have to see within the courage of what we're seeing from Ukraine, and again, the dearth of information on Kharkiv, on Kiev, on Mariupol, and down to Odessa is, well, I think we're flying blind here, John. We're flying blinder than we were 3 days ago.
And Chairman Powell also flying blind, arguably, Lisa. How does he control this one? Payrolls on Friday, ADP later today, a CPI print on March 10th, could have an 8 handle. He speaks today. They meet on March 16th. What on earth are they going to do this year?
Yeah, forget have they lost control over the narrative. Have they lost control over the inflationary pressures in the economy? And if they have, what's the ramification for an economy that's been hinged on every Fed Chair Powell word for the past couple of years? How do we then dovetail into a new regime?
Futures this morning up 0.6%. Good morning to you all. Let's whip through it. Your Nasdaq up by 0.7%. The bond market, what a move yesterday. Yields down hard in the US, harder in Germany, and much harder in the UK. We reversed some of that move today, up 3 basis points to 175.47. WTI very close to 110, 109.60, up by 6 percentage points. And euro dollar, Lisa, a break of 111 to the downside.
There's a similarity between central banks in developed markets, the Fed, the ECB, and OPEC Plus. We've had these cabals controlling or at least helping markets into certain directions at their will. And now there is an issue of have markets gotten away from those definite crews and actually end up
dictating themselves based on supply and demand. OPEC Plus is meeting today to discuss April production plans. Right now, actually, they are beginning that meeting. ExxonMobil Investor Day at 9 a.m., EIA crude oil inventory report at 10:30 a.m. How do they deal with exactly what you're talking about, John? 6% overnight increase in WTI to the highest levels, in some cases going back to 2011 at one point overnight. How do we then go to either faster production? Do you talk about that? We don't have official sanctions. Do you count this as just a temporary shock? And then you have, of course, the pandemic, which is moving to an endemic phase with people wanting to go out and actually spend and travel. 9 a.m. EU finance ministers are holding an emergency meeting by video conference. How much is it going to be dominated by how to deal with the ramifications of some of the sanctions so far? It's not just oil. It's not just crude. Natural gas in Europe has gone vertical. It is just shocking to see some of the moves, 60% overnight. You've seen prices more than double in just a couple of sessions. How do they deal with this at a time where it's not clear where they can get other gas supplies other than Russia and Ukraine? And at 10 a.m., Fed Chair Jay Powell delivers that semi-annual testimony before the House Financial Services Committee. People have been pulling back their expectations for rate hikes. You can see that in the 2-year, which has come down dramatically, 1.4% right now in the U.S. You can see this in the rate hike expectations for the year, which have gone from 7 to fewer than 5 this year over just a couple of trading sessions. How does he look at all of this and give a sense of how he thinks Fed policy actually engages with an inflation well beyond the scope of what the Fed can address, John?
Lisa, thank you. Thank you very much. A big story just crossed in the Bloomberg, Tom. Let's sit on this one just for a second. The Ford Motor Company will split its fast-growing electric vehicles operations from its legacy combustion engine business.
Normal corporate news.
Historic reorganization. Tom, I think the story of crude this morning speaks to that effort as well. 110.
And also an affordable electric car. What I hear from so many people is GM and Ford go gung-ho on this, and others, John, enter away from Tesla. I'm going to call them first on the block, is, okay, we got to do this, but we got to make it accessible for the American public, and maybe this gets them more focused.
Ford up in the pre-market by almost 4%. We'll touch on that one a little bit more a little bit later. A story for the president as well. The president of the United States last night addressing the nation.
He badly miscalculated. He thought he could roll into Ukraine and the world would roll over. Tonight, I'm announcing that we will join our allies in closing off American airspace to all Russian flights. A Russian dictator invading a foreign country has cost around the world. And I'm taking robust action to make sure the pain of our sanctions is targeted at the Russian economy.
Team coverage starts right now with Joe Matthew of Bloomberg in New York, Maria Tadeo in Brussels. Joe, the latest sanctions from over the weekend are already starting to bite. Is there more still to come?
That's a great question. It has a lot to do with what happens in Congress. There has been talk of a renewed effort to try to get some legislation to codify existing or maybe add to the sanctions that the Treasury Department has been handling all on its own. And after last night's address, if you watch that speech, the better part of an hour, actually almost an hour to the minute, the first 10 to 15 minutes, the president talking about Russia, Ukraine, both sides of the room up, an uproarious standing ovation as he called Vladimir Putin a dictator and spoke to some of the sanctions already in place. That is giving us the thought there might be a renewed effort here. Maybe they get back to the drawing board in the Senate Foreign Relations Committee. The problem was they could never agree on timing for sanctions, but now that an invasion has begun, that really shouldn't be an issue anymore.
Joe, the issue is also you have sanctions, but then you have to put sanctions in place and make them tough and make them work. Is there any indication that's going to occur?
Well, I guess, look, I think we can only take the administration at its word. And it's fascinating to see as the government does this self-sanctioning by corporate America. We're talking about Apple, Nike, Exxon, some of which are apparently have been in touch with the Biden administration. They're helping to lead this on a corporate level as well as a government level.
Maria Tadeo, how is Europe facing off with natural gas prices that have been surging to such a degree and dealing with the fact that there is a hardened feeling that they need to do something to stop Putin?
Well, there is, and we're going to find out today. That's a reality. We have European finance ministers speaking and meeting here, and they will have to come up with a plan. So far, what we hear, but again, you have to factor that a lot of this is for the domestic audience. You don't want to have people in panic trying to buy fuel, but what they say is that we can deal with this. This is the end of the winter. The worst is over, and then we can think about how we want to go from here. Of course, you also have the renewable spin, but the reality is we've seen it this winter. Renewable energy, clean energy won't do the job. It's not advanced enough. The other thing that I would point to, of course, is that there will be a very real debate today among finance ministers in terms of where do we go next? And that takes us to the energy conversation. We've seen that that continues to be a big money-making for Russia. There will be a conversation about what do we do next if we see that Russia is able to weather this. And of course, we continue to see pictures from Ukraine where it's now people, where it's houses, it's offices, nothing to do with military targets that continue to get shelled every day.
Maria, there has been a lot of discussion here and elsewhere about how a lot of companies are self-sanctioning, that there's a de facto sanction in place on Russian oil in many places of the world. Does that give the U.S. and, frankly, European allies more freedom to go ahead with sanctions in name as a result of the moves that have already gotten ahead of them in markets?
Well, it depends, and I'm just going to give you one company, Total, yesterday. It was a very muted reaction to what we're seeing in Russia, and then the French finance minister, Bruno Le Maire, came out and said, you guys should think twice about your investments. So there is still pressure from the political side onto the companies. So yeah, a lot of these companies don't want to get involved, or they say they don't want to do future business with Russia because they have very little visibility in terms of where we go from next. But in terms of the contracts that are still happening, for many, it does continue to be in some ways business as usual.
Maria, thank you. Maria Tadeo out of Brussels. Joe Matthew here in New York City. Just getting a headline from Prime Minister Boris Johnson in the UK, speaking to Parliament at the moment. There is more to be done on Russia's sanctions, Tom. There's a big feeling, a conclusion for many people, this is not over yet.
And it's off Dan Tannenbaum, and Joe Matthew just addressed this as well, John. I think this is absolutely critical. Just mouthing sanctions doesn't work. There's a lot of evidence of that, and I'm going to be fascinated in the coming days to see the follow-through, and very clearly, John, we'll see that follow-through in price. I'm going to go back to Chicago wheat. John, I don't know if you're aware, but there's a wheat price in Chicago as well.
I've been following it. 2008 high, Tom.
You think? I follow
I'm on
wheat.
top of it too.
I follow wheat off the London Metals Exchange. And John, what I would say is wheat, with the explosion yesterday and the first trade today, shows those linkages in. Will the sanctions work?
The Prime Minister Boris Johnson, Lisa, saying we'll publish a list of people associated with the Russian president. John Ehrlichman put together this list, and I think it's important for everyone to hear just how much we've already seen from corporate America isolating Russia. Apple product sales, Nike online sales, Dow product sales, FedEx, UPS shipments, releases from Hollywood, Disney, Warner, GM shipments, Harley-Davidson shipments, Boeing pilot training. That's important, Lisa, for obvious reasons. Visa network access, MasterCard network access. All of this is building day by day, hour by hour.
Which is the reason why I wonder how much freedom this actually gives to governments in the U.S., in Europe, to actually make the move in name if markets and, frankly, if companies are doing it already and getting ahead of them and basically creating a pathway for them to do it without that much more disruption.
So there's a huge ESG question here, which I think we'll explore more in the coming weeks and months, Tom. You and I are on the same page about ESG. Some of the hypocrisy around that conversation never ceases to amaze me. But clearly, there are many companies who believe they have a moral obligation to step back from doing business with Russia, even if the sanctions don't require them to do so.
John, I look at them as discrete discussions. There's going to be a big ESG debate. I totally take the point. Major shout out to Bank of America, who's done leadership on that. But John, this is a war. We got to remember this. This is a war, and we're in an information vacuum right now. Let's see where we are 3 days from now on the war before we talk about oil and ESG.
Well, you've got oil companies making multi-decade decisions.
Yeah.
Exxon, BP, Shell, leaving Russia behind. Futures up 0.7% from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden vowed to confront Russia over the invasion of Ukraine and warned Vladimir Putin that the war would leave his country weaker and more isolated. In his State of the Union address, the president tried to show U.S. solidarity with Ukraine by inviting Congress to stand in support for the country. Democrats and Republicans and Ukraine's ambassadors stood and cheered in a rare show of unity after a year of bitter divisions. The president spent less than 10 minutes discussing Ukraine before turning to the economic hardships of the pandemic. He pledged that his top priority would be to confront rising prices, and in an unexpected move, the president urged people who have been working from home to return to their offices. Meanwhile, Russia says its forces have captured a port city on the Black Sea, Kherson. The Ukrainian government hasn't confirmed that, but said overnight that Russians were moving towards the city. Oil has extended its relentless rally. Prices went over that $100 a barrel in London and New York. Investors will be watching OPEC Plus for a response when the cartel and its allies meet today to discuss April supply. The Iran nuclear talks have narrowly avoided a collapse, but European and U.S. officials warn that time is running out. Diplomats trying to salvage a landmark deal remain stuck over key disagreements. Iran demands that IAEA monitors and ends their investigation into its past atomic activities, but Western diplomats have rejected that. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Russia invades Ukraine.
We have proven our strength.
The nature of this war changed yesterday.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
Ground troops are closing in on the Ukrainian capital.
Swiss abandon neutrality.
And analysis of what it all means to you.
Energy is on the table.
We could see oil prices moving closer to 120.
There is a lot of interest to offload Russian assets.
Look to see more companies announce their exits from Russia.
Keep it tuned to Bloomberg Television and Radio.
Inflation is robbing them of gains they thought otherwise they would be able to feel. I get it. That's why my top priority is getting prices under control. One way to fight inflation is to drive down wages and make Americans poorer. I think I have a better idea to fight inflation. Lower your costs, not your wages.
The President of the United States in an address to the American public last night from New York City this morning. Good morning. Futures bouncing back 0.8% on the S&P, on the Nasdaq 100 up 120, up 0.9%. A big rebound in yields as well. I say big, but relative to the move low we saw yesterday, it's nothing, is it? No. 10-year yields up 4 basis points on 10s right now, 176.50. And if you're just waking up, we had a bit of a rally in crude, I think it's fair to say. On Brent, 110.73. On WTI, Tom, close to 109.
Yeah, the market's moving, and the thing I'd point out right now is ruble on a tear, 109 to 112. Not out to weakness for the day, but that's the one statistic, John, that sits out to me right now. And this, what do you think of John 210 spread down to 35 beeps with a 34? We had a touch of a 33 basis point for a bit. I mean, the curve flattening is tangible.
I wonder if Chairman Powell builds out the front end again after we hear from him today. Yep. And when we hear from the Fed next week, 2 weeks away.
Yep, there's no question about it. 2-year up 7 basis points right now. You wonder where that will be after the chairman's comments. Alberto Gallo, and John, what a joy to have Alberto Gallo in the studios with us, a real symbol of the end of the pandemic. A gentleman of Europe, his public service to Italy and the Navy, and a guy who knows it's price up and yield down. John?
Our friend Alberto back. I didn't even know he was here in New York until I saw him in the commercial break. Alberto, good to see you. Let's just start with the massive dislocation we've seen in this European credit market recently. The extent of destruction you've seen in the market, Alberto, and where you've been taking opportunities, where you've been taking some purchases in.
This is a bear market. It's a high vol environment. We want to be preserving capital, and we want to be in companies that have government support or shareholder support. Now, the good thing is there are regions of the world which are in defense mode, towards state capitalism. Europe has supported companies during COVID and will continue to do so during the next months. So, there are names that in the travel sector, in the industrial sector that go down, but then they have sovereign support. And those are big opportunities, and they yield a lot more than inflation. Think about also the banks. So we are buying in these sectors. We were very cautious at the beginning of the year, and we're buying slowly. The weak spot continues to be emerging markets. And when people see the Fed, doing less, I think that's wrong. The Fed will continue to tackle inflation. That will continue to hurt emerging markets together with political and geopolitical risk.
Alberto, just to pick up on what you were talking about on where you're buying, do you do that throughout the whole of Europe? Is there a bias towards a particular part of Europe? How do you think about that?
We are doing it across. However, there are countries in the world that are more vulnerable to high commodity prices and high energy. So, Southern Europe is more vulnerable, but outside of the Western European countries, you've got Turkey, you've got Egypt. There's a lot of countries that are more vulnerable. And in emerging markets, you could say that there's still a minefield. There's still a lot of countries that are going to be affected by the combination of high energy prices and higher interest rates in the US and a stronger dollar. So we're very, very cautious there. And we are using limited dry powder at this stage. We expect a little bit more volatility later in the year.
Alberto, you were saying that the Fed is still going to hike rates as much as perhaps people had previously thought because inflation is still very much an issue. Is it the same story for the ECB?
ECB is likely to step back, perhaps only do one hike this year. They clearly have a closer issue, but also inflation in Europe is a lot more driven by energy. So half of the 5% inflation in Europe comes from energy. In the US, it's around 1/3 of the 7.5% CPI year on year that comes from energy, at least so far. So European inflation can still be, deemed more transitory, but in the US, there's rents, there is services and wages. So it's a kind of a different problem here.
Does that make you, in general, more bullish, ironically, on European corporate debt, on European rates, simply because you have that ECB benchmark at a time when the Fed is going in the opposite direction?
That's exactly right. We're in the context of a bear market for bonds. The place to hide, the least bad place to hide is still Europe. And within that, in the credit market, you can still find companies and sectors that have sovereign support. So you get a less hawkish ECB, and then you get some sovereign support, for example, to French companies or to UK companies. So there are some places to hide in Europe. Where you want to be cautious the most is still in EM, in my opinion, because you have compounded effect of higher commodity prices, which is bad for some EM countries, and then you have a stronger dollar and higher Fed rates.
Alberto, you mentioned the Federal Reserve. You think they still hike. Most people assume that's the case. Where there are doubts about how far they can actually push it. The ECB, is it even part of the conversation for 22 anymore, as far as you're concerned?
It's possible they do one hike in 2022. It really depends on how long this lasts. European countries have around 5 months of gas supply, of gas reserves. So, if the conflict in Russia, Ukraine is a matter of weeks, then, we could still see positive growth and more fiscal spending. Think about Germany upping the defense spending. So it will become a reflationary environment, which is positive, and the ECB will have to hike. If it lasts months instead of week, if the war is not over by the summer, then we're really looking at much lower growth in Europe.
Then we've got a big problem. Gas right now up by more than 30% in Europe. Alberto, it's great to see you. Good to catch up, buddy. Hopefully next time under different circumstances to have a more broader conversation about this market, and hopefully with a better outlook for this economy too, Lisa. These headlines coming from Boris Johnson, happening right now in the House of Commons. The British Prime Minister saying there's more to be done on Russia sanctions. Goes on to say, Tom, Putin's actions in Ukraine constitute war crimes. Yeah. This is something the Ukrainian president himself is trying to communicate as well, and now we're hearing that echo reverberate around Europe. Boris Johnson, Putin's actions in Ukraine constitute war crimes.
And John, that, I think Americans are really removed from this phrase. I mean, the idea here is, John, is The Hague, right? I mean, there's a whole process to this.
You take the president of Russia to The Hague? I mean, Tom,
yeah.
How far down the road is that conversation? Yeah. We need to get through what's playing out right in front of us.
Another headline, John, as we look at sanctions, and I just think this is absolutely critical. The wonderful Japanese airline ANA to suspend all flights to Europe. Why is that? To get to Stockholm, to get to Milan, to get to Istanbul, you have to fly north and over Russia to get there. You don't go straight east-west. You got to go across Russia. They can't.
Russia, Lisa, increasingly isolated.
And basically saying that they're sticking to their guns, at least Vladimir Putin. And here's the question. At what point do the rank and file and the oligarchs start to say enough is enough?
Coming up, Emily Rowland, the co-chief investment strategist at John Hancock. Looking forward to that chat. With equity futures up 26, up 0.6%, and crude approaching 110 on WTI at 109 6 From New York, this is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Year to date on the S&P 500 down almost 10 percentage points. Coming into Wednesday on the NASDAQ, down 14. Here's the bounce, a small one, up 0.6% on the S&P. On the NASDAQ right now, up 0.6% also. The moves in the bond market, that's where the story's been, the headlines as well. Look at the bond market right now. 2s10s in Germany, 2s10s in the US as well. The moves yesterday down 10 basis points almost on 10-year Treasury yields. On a 10-year Bund down 20. We reversed some of that, up 4 right now on a 10-year in America, up on a 10-year in Germany by 7, getting back to 0 just about. But I keep talking about the front end as we price out rate hikes of the ECB. We do fewer here at the Federal Reserve maybe. Do we build that back out when Chairman Powell speaks a little bit later? That's where my focus will be. My focus right now in the commodity market. We talk so much about crude. We need to talk about soft commodities as well, Tom, the ag, so to speak. We all know the stats for Europe. It depends on Russian crude. About a quarter of its crude comes from Russia. For the global economy, Tom, a quarter of the wheat for the global economy comes from 2 places, Russia and Ukraine. Look at that move right there, up 7%, Tom, and taking things back to highs we haven't seen in over a decade.
And it feeds on itself in that to move a tangible like wheat, you need oil. So they're inextricably linked to each other. I think that's underestimated, John.
And Lisa, when you start to think about the consequences of this, the economics, the politics, the instability of those two wrapped together, can get messy quickly.
And how are they going to get those supplies? Where are they going to get them from? And if the euro is depreciating, how much more is it going to cost them elsewhere?
That Deutsche Bank note was fascinating, wasn't it?
It was.
The inverse correlation between crude higher, euro weaker, the vicious cycle of higher inflation, weaker growth, and what on earth does the ECB do with that in the mix?
Especially because a weaker euro means more inflation. They want less right now, and they need to import things from other places that are not denominated in euros.
Deutsche Bank saying it's inflicting damage on the Eurozone economy right now, and the ECB needs to do something about it. We'll catch up with Deutsche Bank in about 60 minutes. That's the cross-asset price section. Your single names this morning. Let's say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Yeah, the moves in commodities, obviously a big player here right now as far as some of the individual names. That war in the Ukraine causing a lot of investors to look at the volatility in the commodity space and wonder if that's going to be beneficial to the bottom line or whether it could be a value trap. But at least for right now, a lot of folks seem to be bidding some of these names up, with aluminum at a record high. You're seeing Alcoa higher here once again on the day, up about 3%. You talk about some of those soft commodities like wheat, safflower oil, corn, big export products coming out of that Eastern European region. Nutrient shares higher by about 2.6%. Big maker of fertilizer here. They talked a little bit yesterday with Bloomberg News about some of the disruptions of a lot of the ammonia, potash, and other nutrients coming out of that Russian region, saying that these disruptions, at least in the short term, will continue to push prices higher. And keep an eye on the oil services stock. There was an interesting note yesterday about Schlumberger. day. Actually, the worst performing of the energy stocks over the last couple of weeks, primarily because of its outsized exposure to the Russian economy here. Citi actually said that it had the highest exposure, higher than Halliburton, higher than a couple of the other names. Those shares, though, higher here on the day after some new sell-side notes coming out today saying that this company could also potentially be a beneficiary. And of course, with all the disruptions going on in the energy space, that's putting a renewed focus on renewable energy. Of course, electric cars, EVs, a big component here of the Biden administration's plan. We did get some word here from Ford about the separation of its two businesses. One, the EV business, the new business that's going to basically be the Ford Model E business, and the old legacy business, the Ford Blue business. Now, when I say separation, they're still going to be under the same umbrella. There's not going to be a spinoff that a lot of investors had anticipated, but they will be run as two distinct units here, allowing the company to focus here on that EV rollout. That's going to put a lot of interesting focus back on GM and its cruise business. They did finally name a permanent CEO, Ken Vogt, who actually founded that cruise business, going to be stepping back into the CEO spotlight after some disagreements between the previous CEO, Dan Amon, and Mary Barra over whether that business should be spun out. Those shares higher, Tom, by about 1%. And keep an eye on the retail space. Nordstrom did come out with earnings. They were good, to say the least. Those shares up a whopping 32%.
Saw that from Target yesterday as well. Romaine Bostic, and again, the close this afternoon. Emily Rowland with us right now with John Hancock. She's co-chief investment strategist. We get a view from Boston here on conservative money. Emily, it's a gift. Price up, yield down. Do you reallocate out of full faith in credit?
Yeah, you know, Tom, we're continuing to emphasize intermediate term, higher quality bonds in the U.S. It's actually been an area that we've been focused on in our recommendations for quite some time. We want to be there right now. You know, we've seen an economic growth climate which is slowing. Clearly, there's a lot of cross currents going on right now. Stagflation's now in the mix, as we can see with this relentless rise in commodity prices, and we've clearly seen a bid for that part of the market. We are really thinking about risk management right now. That's going to continue to be critical. We're being very careful about the way we're traversing in other areas of the credit market, particularly emerging market debt, where there's going to be a lot of spillover here from sanctioning, self-sanctioning, et cetera.
Okay, that sounds like John Hancock gloom. Let's get down to the math of it, oh wise one. And I know you did this at Boston College. Let's go to the R squared. Do you run conservative money now R squared to the index, or do you have to be more idiosyncratic given war?
We have to be extremely thoughtful here. And this market's been incredibly challenging because it feels as if, you know, the odd safety trade has been energy and cyclicals and deep value, and other parts of the market like quality stocks have underperformed. We think that there's an opportunity here to add to those positions. We see, again, an economic growth climate that's slowing, but still positive. We're nowhere near recession right now. PMIs we saw over the course of the last week still well above 50 here. We see an earnings backdrop, particularly in the U.S., where earnings revisions are positive. In this type of environment, we want to allocate money to quality growth. We want companies with great balance sheets, a lot of cash on their balance sheets, good earnings stability as we continue to see this play out.
Does that count for Europe as well, or is that just a U.S. type of positioning?
We want to be really careful about the way that we're sorting through the European market, in particular areas like non-U.S. value stocks, which do have a lot of that cyclical exposure, particularly around financials. We want to be thoughtful about that. In Europe, we want to really emphasize quality. So again, it's sectors like technology and healthcare, which have really strong secular growth stories and some upside potential here based on better earnings prospects. So being thoughtful in Europe is really going to be key here. Emerging market equities are another area where you want to be thoughtful, but there's an interesting tailwind there, which is that Chinese policymakers are actually stimulating, which is helping their market.
Emily, how much are you actually moving around allocations right now amid the sea of uncertainty?
We aren't, Lisa. It is so hard right now to focus on the intermediate term, and that's exactly what we're trying to do. There are tons of cross currents that are impacting markets. Again, it's about playing a little bit of defense, thinking here a lot about risk management, but also focusing on the intermediate term. We see, again, an economic climate that's solid but slowing. We see an earnings environment that's supportive, but we see a lot of challenges here in terms of the choppiness of a Federal Reserve that's trying to hike rates into a slowing growth environment. That's going to be a big challenge, particularly as we watch the data over the coming months. The Fed's in a position where damned if you do, damned if you don't. If you do, you obviously risk inverting the yield curve. We're under 40 basis points this morning in terms of the 2s, 10s. But if you do, you risk really continuing this inflationary spiral that we're starting to see play out in the market. It's a really difficult, really challenging environment here for the Federal Reserve.
Emily, are we going to see use of cash that is normal? How would you assume corporations adapt to this? And I don't mean use of cash like dividend, share buyback, but I use it even as corporate issuance and the rest. What is going to be the use of cash forward when this crisis ends?
Well, I think corporations are doing a lot of work right now. You all have reported a lot about, ESG and how companies move forward with that. You've talked a lot about, how we think about the huge changes that we're seeing as a result of this geopolitical crisis. So I think there may be a lot of investment in those areas. I think there's going to be a lot of consideration here as we move forward in terms of where those investments take place. Is it moving supply chains back here to the U.S.? That's one element that we're watching really closely. That's going to take big investment. Is it responding to higher wages as inflationary pressures build? I think what we'll see is a war on margins as this year continues, and that cash on the balance sheet is going to start to get deployed in different areas as those margins become harder to defend.
Emily, always wonderful to hear your voice. Emily Roden there of JH Investments. Thank you very much. Some reporting I want to catch up on and get everyone up to speed with. This comes from TASS, a Russian state-owned media operation, saying that Russia, Tom, is worried about the risk of direct conflict with NATO, going on to say they hope that NATO has the good sense to avoid that conflict. The latest headlines out of Russia. In addition to that, on OPEC+, the meeting just started, and according to a delegate, they've already agreed to raise oil output by 400,000 barrels a day in April. Widely expected, won't really make a dent with what we're seeing right now, Tom, at 109.70 on WTI and 3.110 on Brent.
111 on Brent, and I'm watching it on a micro basis here. You can do that on a Bloomberg, and the fact is oil is bid up here. And maybe, John, it's even that delay to April. April seems forever away as well. And I would go to the great work, John, of Javier Blas publishing yesterday, detailed dynamics on oil. I know we've got Amrita coming up. And the bottom line here is this is a lot harder to do to bring on supply than everybody's talking about.
This is really complicated in practice, Tom. You mentioned Amrita Sen of Energy Aspects. I was just reading through her note just there. This is the quote. Most European majors are not touching Russian oil. She goes on to say, spiking freight rates and war insurance premiums are significantly complicating transactions. Lisa, you've picked up on this too. Here's the quote from Energy Aspects. Several ship owners have reportedly been unwilling to make bookings from the Baltic or Black Sea due to the lack of war insurance. The situation's changed and they're struggling to keep up.
Basically, even if you don't necessarily put sanctions on, you have put sanctions on because of the uncertainty and some of the calls from leaders around the world to do more, and thus the uncertainty about the future and what will happen if you have Russian oil and all of a sudden it's sanctioned. How do we move forward in this kind of environment? How do you trade oil when you have no sense of how inclusive Russia will be?
111.50 on Brent coming up. Amrita Sen of Energy Aspects, then later 8:30 Eastern Time. Why Deutsche Bank thinks the ECB might have to think about intervening in this FX market. Euro dollar 111. David Folkers Landau, 50 minutes away. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Western military officials warn that Russia's invasion of Ukraine is entering a new phase. They say it will be more deadly time for the country's civilians and its army. Earlier signs are that Russian commanders are abandoning the approach of lightning strikes into cities. Meanwhile, Russia says it has captured the port of Kherson on the Black Sea. Ukraine's government didn't confirm that, but had said that Russian forces were advancing on the city. In his State of the Union address, President Biden vowed to confront Russia over the invasion of Ukraine. He warned Vladimir Putin that the war would leave his country weaker and more isolated. The president also said that his top priority would be to fight rising prices. And speaking of rising prices, inflation in the Eurozone has risen to an all-time high. Consumer prices jumped 5.8% in February from a year ago. The rate exceeded expectations in the region's four largest economies. A core measure that excludes volatile components also accelerated, reaching 2.7%. And it's a historic reorganization of one of the world's oldest automakers. Ford will split its fast-growing electric vehicle operations from its legacy combustion engine business. Last week, Bloomberg reported that Ford CEO Jim Farley was considering a split. Farley said today that the reorganization will give Ford startups speed and unbridled innovation. And Major League Baseball has canceled opening day after owners and players failed to agree on a new collective bargaining contract. Commissioner Ron Manfred scrapped the first two series for each of the 30 teams. Players are unhappy that payrolls have shrunk 4% since 2015. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
What
we have seen already from Vladimir Putin's regime in the use of the munitions that they have already been dropping on innocent civilians, Mr. Speaker, in my view, already fully qualifies as a war crime.
A war crime, the words of Boris Johnson, the British Prime Minister from New York City. Good morning. Futures positive 0.5% on the S&P and the Nasdaq, up 0.5% also. The move in crude, it's a wow move, up 6.5%, 110.16. That is WTI, that is not Brent. Brent, a couple of dollars higher, I believe, Tom, with a 112 handle right now.
Yes.
I'm looking through the contract table, Tom. CT Go on Brent on the Bloomberg terminal. Just looking at some of these prices, TK, you look at where we are right now on the May contract at 112, then go out to next year, take the June contract in 23.86. They call that, Tom, super backwardation. Just unreal.
That may be backwardation, but it's also an original time and an original crisis. We have done everything we can to bring you informed guess on these many topics of war, and an informed guess on oil, on supply, demand, and indeed on international trade is Amrita Sen, founder of Energy Aspects, out with a spectacular note on the realities of what we're reporting. Amrita Sen, I learned a long, long time ago to have immense respect for the trust of the system, and that trust is the basic idea of letters of credit. Tell me how letters of credit are going to work now, next week, into April, or to the point of backwardation that John Farrow just talked about.
Yeah, it's the best question I've been asked. I'll tell you that much, Tom. Because, you know, the problem is, exactly like you said, there is no letters of credit right now. Nobody is willing to issue refiners, any buyers with letters of credit because of the banking uncertainty. Now, what does it look like in a week's time? It's hard for me to say. However, I will say this, the U.S. in particular, but even some European countries are fearing oil prices, gas prices being so high is going to hurt the economy, so they want to carve out exemptions. They need to be very specific and clear about these exemptions. Once those exemptions are announced, then letters of credit can resume again with those certain banks, and you can see some trade start up. But right now, it's complete paralysis.
Amrita, in the meantime, OPEC Plus agreeing to raise oil output by drumroll 400,000 barrels a day in April, according to a delegate. I mean, that's nothing, Amrita. Javier Blas on Bloomberg Opinion saying the situation calls for emergency measures. What are those emergency measures?
Yes, the 400,000, we all know that in reality is going to be half of that because most of these countries don't have the spare capacity. Well, emergency measures, we saw the IEA releasing 60 million barrels of SPR yesterday night, and prices rallied by $6 on the back of that news. Just tells you, I've been talking to traders and they're like, well, if you really wanted to make a difference, you needed 200 million barrels. But that's not happening because we don't have that much oil.
What's the pricing mechanism here, Amrita? You've got some people saying this is a completely tight market where people can't get physical delivery, and other people saying there are some oil companies that are taking advantage of this and kicking up pricing. Which is it?
It's the former. I mean, look, yes, it's not that the oil isn't there. The Russian oil is there, but if you don't want to touch it, then you don't have that oil. I think it's very important to understand, particularly for Europe, this is very short-haul barrels. Now, if Europe needs to go and get something to substitute for Russian oil, say, let's say they get U.S. oil or West African oil, the sailing time is a lot longer. So they will be left with the period of no oil coming to Europe, and that's why you're going to get refineries suffering. That's why the ultimate solver mechanism is high prices. Demand has to come down.
Well, but Amrita, the reason why I ask is because people have been arguing for example, the U.S. to support the shale industry, to support the the domestic energy industry. And other people have come out and pointed out, you know what, they could actually increase production dramatically. They're just not doing it yet on their own volition. What's your view on that?
Again, I mean, it's a tricky one because, yes, they are not doing it because shareholders are making them return money, right, to them because they've been loss-making for a decade. Yes, absolutely right. But they are also they're trying to send a signal to the Biden administration because the Biden administration ultimately wants to transition to a green energy. And a lot of the measures, more medium-term measures that they are taking, doesn't encourage a lot of drilling in the U.S. And that's the conversation they want to have, saying, okay, if we're going to drill right now, get more oil out, but we also want that certainty that we can continue doing that in the medium term.
Amrita, what you just said is so important just moments ago. Essentially what you said is 2020, spring 2020 in reverse. And I remember when Jeff Curry of Goldman came on with Tom and I on radio, and he said, basically, we need to breach storage capacity, and once we've done that, you could see negative prices. And everyone was like, wow, negative, that's ridiculous. And then we had negative prices, that's what's happened. You need to reverse engineer that for me and help me understand, Amrita, if it's spring 2020 in reverse, how high do crude prices need to go to destroy demand? How much more higher from here can they go?
That's exactly it. This is COVID in reverse, 100% accurate. We have never tested this. We went to 147, 148 in 2008. That's not what killed the market. It was the credit crisis. We can easily breach 150. We have genuinely never tested what price do we need to be if the economy is still okay to really curtail global growth. We could be really talking about numbers. We've, 170, 180. You could literally be picking a number right now.
John, can we go nerd here?
I think we're trying right now,
Okay, Amrita said, is oil a Giffen good?
A big chunk of it is. Yes,
we've never tested it.
Yes, we've never tested it.
Yeah.
And it's inelastic, right? You're coming out of COVID, you still want to travel.
John, you like that?
I did like that. I mean, the number there, 170, 180, is what we could be testing here. Amrita, we need to continue this conversation. Come back soon.
Thank you,
and let's
Amrita.
carry
Brilliant.
on. Amrita Sen of Energy Aspects. Tom, spring 2020 in reverse. And when you start to think about that dynamic, you've got to think about the unthinkable, because the unthinkable in spring 20 was negative prices. Amrita's talking up 170, potentially higher than that. I'm not saying that's where we're going, but if that's what the analyst community is saying, Tom, spring 2020 in reverse, then we could be in for much higher prices.
We got David Fokerts-Landau and Lawrence Summers coming up, and they know their microeconomics, John, and it's real simple. Jeff Curry taught microeconomics at the University of Chicago. That's the place we're in on these supply and demand dynamics, the slopes of these curves changing within war.
Futures up by 0.5% on the S&P. Crude, Lisa, 110.33.
I'm still just discussing this in my head. I'm having a little discussion here about COVID in reverse and just remembering negative prices and just looking at the opposite and thinking, is this a temporary shock? What are the reverberations of that?
It's really, really difficult to figure out. I think we're all doing this in real time.
You said 170, right?
That's what Amrita suggested.
She said, pick it out of your hat. I mean, honestly, people have been saying that. How do we even begin to understand this? This has never happened before, John.
Amrita essentially said the same thing. We've not tested this before, and perhaps we're about to test it. From New York City this morning, good morning. Tom Keene, Lisa Bravis, and Jonathan Ferro. Futures up 0.5% on the S&P, up 0.6% on the NASDAQ. Yields higher by 3 basis points on 10s to 175.65, unwinding the move lower in yesterday's session. Crude up to 110.28, up by 6.6%. Heard on radio, seen on TV for our audience worldwide. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The contagion channels for Russia now are heightened global uncertainty and commodities.
This could just exacerbate inflation, exacerbate supply chain woes.
The inflation here is broad-based and becoming sticky.
I think we're all trying to figure out what's going on now.
This looks like this is going to be a rupture that lasts for years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. And a most interesting day, to say the least, here. The crisis continues, the war continues, and the markets continue to price in the change of the immediate and, John, out to the future as well. Oil leads the way this morning.
The crude unbelievable, and the comments from Energy Aspects moments ago, Tom, fascinating. I'm Rita Sen. It's spring 2020 in reverse. In spring 2020, demand collapsed and we needed negative prices to stabilize the oil market. This time around, Tom, how much higher do prices need to go to destroy demand and stabilize the market again? Because supply right now, not in the picture.
112 on Brent crude. John, I've got a fancy chart, which is an inflation-adjusted Saudi Arabian called Saudi Light Oil. And there was a spike, I should say, of $161 just for a cup of coffee years ago. And you and Amrita were talking 170 as a test.
Amrita said 170, maybe even higher. We've never tested this before. It's truly original, as you might say, Tom. Russian companies, who wants to deal with them at the moment? This line just came from ING. I think this is so important. They've decided not to do any business with any Russian companies. Tom, that is not just a stance based on sanctions. That is a moral stance as well.
And this is the Dutch conglomerate. It's a huge roll-up, John. For those in America and New York, this is the roll-up of Furman Cells a while back. And what's so important to me here, John, is this is a bank that has had the flag out for frontier economies and global for decades and decades. To hear that announcement.
It's got to be the number one question you ask of leaders right now. the C-suite. We caught up with Jamie Dimon at JP Morgan this week, and he referred to himself as a patriot. He abides by sanctions, and if the US government tells him not to do something, he won't do something.
Right.
A law-abiding citizen, okay, we understand all of that. The number one question for them is not just about sanctions. It's, do you have a moral obligation to step back from doing business with Russian companies, given what's happening in Ukraine? I'm not advocating for the answer to that. I'm simply asking the question. ING have made that call, Tom, decided not to do any business with Russian companies.
Part of the speech last night of the President of the United States, Lisa Bramwitz, and you've lived this. You're in Fargo, Lisa, and you need to go out and get a quart of milk. Sometimes you drive 200 miles. I mean, what is this gallon of gas going to do now in America at $5 a gallon?
Well, let's take what Amrita Sen was talking about, right? We don't understand exactly what price things have to get to for it to actually crimp demand. Well, what does that mean for economic growth, right? I mean, if we're testing that type of strategic analysis, how far do we have to push the idea of U.S. momentum? And frankly, how does Jay Powell today deal with this? When how much control does the Fed policy actually have over gas prices?
John, I'm going to go to the data and the havens here right now. Euro Swissy was a 101 handle, truly stunning, strong Swiss franc. We pulled back from that. Ruble, I'm going to round up to a 112 ruble, shocking. And the ratios, John, in America, I think have been underreported. The 10-year real yield of a negative 1.00 just touched for a moment here in recent hours.
A big turnaround in yesterday's session. Just a monster rally we saw in the Treasury market, in bunds throughout the whole of Europe, in gilts as well. We've got a turnaround at 4 basis points on 10s right now, 176.33 on crude. The rally of yesterday, we build on that, up by almost 7% now to 110.50. But that headline gets my attention, Tom. It gets yours, it gets Lisa's. I just want to reiterate it again, just to pick out a keyword in this too. Decided not to do any new business with any Russian companies. How that actually plays out in practice in the near term, Tom, will be interesting. But they're certainly taking a stance over at ING.
And of course, the write-downs there if they stop doing the old business as well. Right now, on your equity market, Sam Stovall joins us, Chief Investment Strategist, CFRA. Sam, wonderful to have us with you, to have you with us today. Sam, I want to talk very carefully here about how corporations will adapt to war and crisis. What do you believe the American big corporations will do?
Good morning, Tom. Well, I think first off, they will toe the line and do whatever they can to, in a sense, sever ties with Russian countries. But at the same time, I think they're going to do whatever they can in terms of trying to reduce costs of transportation and the direct or indirect effects of higher energy prices. Lisa was mentioning earlier about what kind of a number can we put on the kind of demand destruction. And I remember our economist, David Weiss, from many years ago, telling me that every $10 increase in the price of oil takes off about 20 basis points of real GDP when it's in there for a while. So, you know, that's the kind of pressure that we're likely to be seeing on U.S. GDP growth this year.
Well, Sam, do we have to take down our estimates for corporate earnings? You hear what the analyst community is saying in the commodity market. They're basically saying we need to destroy demand. That's the only way we stabilize this story. What are people saying in the equity market? Do we need to pull down earnings forecasts?
Well, the earnings forecasts have been coming down, just as the numbers have been coming up for 2021, now close to about 48% year-on-year increase. The estimate for 2022 S&P 500 operating earnings is about 6.5%, down from well above 7 at one point. So we continue to see the full year estimate come ratcheting down.
Do you have to assign a lower multiple on top of that as well, Sam? Are you comfortable with this idea the Fed's not going to do as much as people thought they would?
Well, I think you do have to assign a lower multiple. There is a minus 0.5 correlation between the 10-year yield and the PE on the S&P 500. We started this year at about 23 times. Now we're at the upper end of the range of PE ratios from 1.75 to 2.25. So I would tend to say that really the question is, do we stop at the top end or do we go toward an average or even lower? So I think that's the question the markets are fighting with today.
We were speaking earlier this morning with Emily Rowland of JH Investments, and we asked her, are you doing anything right now? Are you actually making any trades? And she said, it's kind of hard to, not yet. There is so much uncertainty as they rejigger some of their allocations. Are you in a similar place?
Well, in a similar place in terms of trying to decide whether the 4,300 level holds on the S&P 500. If it does not, and if we do enact that reverse, that head and shoulders pattern to the downside, combined with a Fibonacci retracement level, that points to 3,800 on the S&P 500. Yet, if you are an investor, and let's say specifically an income-oriented investor, it's hard not to start licking your lips thinking about the dividend yields that are becoming increasingly attractive. So I'm telling clients right now, look for stocks that have favorable CFRA investment rankings, favorable 4 or 5 stars, that pay a dividend yield of about 3.25 or more, and that have above average quality rankings according to S&P Global. So looking at companies like Amgen, believe it or not, Blackstone, ConAgra, Kraft Heinz would fall into those categories, as well as several others like OneOak, Pfizer, and Whirlpool, believe it or not.
Sam, the biggest story of the moment right now really is what's going on in the oil and gas, the market story, I should say, of the moment. How are you gauging, and we talked about this, how you looked at the increase in gas and the ramifications for the economy. How are you backing into those assumptions right now? What kind of oil price are you putting as possible scenarios?
Well, as your prior guest said, this is COVID in reverse, so maybe we can call it a DIVIC environment, which is COVID spelled backwards. I'm basically saying that, nobody knows for sure how high oil will go. Our estimate is that oil might end up peaking in April of this year once we find that most of the tension related to Ukraine has subsided. And so I would tend to say it's really more of a short-term phenomena that we will have to sort of grin and bear.
Sam Stovall of CFRA. With so much to work through. Futures up 0.4%. Sam, thank you, sir. Just to go back to that quote from the Dutch banking giant ING Group, it read as follows in a statement: "We have decided to not do any new business with any Russian companies." They go on to say they'll also, quote, Lisa, waive fees for transactions to Ukraine for personal customers in all our retail markets until further notice to allow people to send money to loved ones.
Yeah, this is moving quickly, and a growing sea of companies around the world are making moves on their own to isolate Russia financially and economically, even without further sanctions. At what point, though, is this in anticipation of some move from nations, including the U.S. and European alliances? How much is that going to have to come for them to persist with some of these self-sanctioning actions?
Well, that's the banks. Let's talk about the energy names. BP, Shell, then Exxon in the last 24 hours pulling out of Russia too. The one last big player standing that I can see is Total. Total saying no new investments. What about existing ones? BP has made a major sacrifice with Rosneft before they've been told to. Total is hanging in there.
Yeah, although Total has come under a lot of pressure. I mean, how many people have said, what's going on? When do you have the other announcement about what else you're going to do? And so you wonder at what point, when you talk about ESG, at one point the G starts to play into things and shareholders start to make noise.
There is a chance, Tom, of course, that this settles down. And to go back to Amrita Sen's note on commodities, Tom, and to highlight the problem at the moment, several ship owners have reportedly been unwilling to make bookings from the Baltic or Black Sea due to the lack of war insurance, the complications around handling Russian crude. We told we get a carve-out over the weekend, Tom. That's what we were told. In practice, in the near term, it's difficult. Can they iron that out in the coming days and weeks, or is this the status quo now, the new normal?
I think you bring this up, and we mentioned this, John, at the top of the show. We're getting a dearth of information from Kharkiv, Kiev, and also from Mariupol on the Black Sea. We're in an information blackout on what's going on in Ukraine, and you've got to believe that extends these announcements.
Brent Crude, 112, coming up, Greg Valliere of AGF on the President's address to the country. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden vowed to confront Russia over the invasion of Ukraine and warned Vladimir Putin that the war would leave his country weaker and more isolated. In his State of the Union address, the president tried to show U.S. solidarity with Ukraine by inviting Congress to stand in support for the country. Democrats and Republicans and Ukraine's ambassador stood and cheered in a rare show of unity after a year of bitter divisions. And the president spent less than 10 minutes discussing Ukraine before turning to the economic hardships of the pandemic. He pledged that his top priority would be to confront rising prices. And in an unexpected move, the president urged people who had been working from home to return to their offices. Meanwhile, Russia says its forces have captured a port city on the Black Sea. The Ukrainian government hasn't confirmed that, but said overnight that Russians were moving towards the city. Oil has extended its relentless rally. Prices went over $110 a barrel in London and New York. Meanwhile, delegates say that the OPEC Plus coalition has ratified an increase in production of 400,000 barrels a day. That move was, of course, expected. And it's a historic reorganization of one of the world's oldest automakers. Ford will split its fast-growing electric vehicle operations from its legacy combustion engine business. Last week, Bloomberg reported that Ford CEO Jim Farley was considering a split. Farley said that today that the reorganization will give Ford startup speed and unbridled innovation. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Month's jobs report caught everyone off guard.
A massive upside surprise.
Just an astounding number.
The most stunning miss I've ever seen.
This Friday, count on Tom, John, Lisa, and Mike to get you the numbers and analysis you need fast.
A labor market that looks increasingly tight.
The economy is shaking off this pandemic.
And that's going to continue to keep the pressure on the Fed.
The February jobs report. Everything you need here on Bloomberg Television and Radio.
The message from Europe is clear. We will stand up. We will not look away when those fighting in the streets for our values face down Putin's massive war machine.
Roberta Metsola there, the European Parliament President from New York. Good morning. Futures up 1/3%. We fade a bit here on the Nasdaq, up 0.2%. Yields higher 5 basis points, 177.53. Look out, crude. Just for a moment there, that was 112 on WTI. Never mind Brent, 111.96. Back through 112, up by more than 8%. Upside surprise on payrolls. The ADP report, to be specific, comes in at 475. The estimate 375. This ahead of payrolls. Your estimate on Friday 403. And just before this number dropped, Tom, Citigroup published, and they said this: we strongly disagree with yesterday's pricing out of rate hikes. To the contrary, we expect the most durable U.S. economic implication of geopolitical tensions, what's playing out in Russia and Ukraine right now, to be more inflationary pressure and consequently more aggressive monetary tightening. Andrew Hollenhorst of the team over at Citi, Tom.
I'll go with that, and James Bullard may be alluding to that 10, 20 days ago, but John, what's so important to me is the x-axis. It's not only the inflationary impulse higher, witnessed Europe this morning, but everybody's length of time is just exploding out to the right.
Does demand get destroyed, Tom, by what's happening on the screen right now? Brent at 113 and WTI at 112.
Well, we will see. Right now, with futures up 14, I don't see, John, do you see much movement in the bond market off ADP?
We've come up a little bit. 178 now on 10s, up 5 basis points, and equities have faded just a little bit as well. Nothing major, but it's there.
Yeah, we're going to have to see. Greg Villiers with us right now with AGF Investments. And Greg and I noticed very quietly an important article, and this is Helene Cooper and Eric Schmidt in the New York Times today. And Greg, to me, it was imagery out of our childhood, and it was dead bodies in snow. It's not a pretty sight. We don't see it much on cable TV, and certainly we haven't seen it there. And James Stavridis is quoted, a good friend as you are of this show. He says something dramatic is happening to the Russians.
Yeah, this is really a staggering development to see accounts of Russian soldiers surrendering, laying down their arms, to see corpses strewn along the sides of roads. The numbers in this New York Times article are astonishing, of fatalities and major injuries on the part of Russian soldiers. So Vladimir Putin not only faces a depression with a D, he faces the prospect of thousands of funerals back in Russia in the next few weeks.
Did the president address this in a manner that was truly bipartisan last night?
Yeah, I really thought it was. I mean, on the extremes, both left and right, I guess there'll always be criticism. But I think that the bipartisanship on Ukraine was sincere, and I think that's a rare plus for Joe Biden.
All right, so he's talking about the issues both internationally and domestically. Do you think that he handled inflation well, given the fact that, yes, there might be some resolution to this invasion, and we hope it's very soon, but clearly the ramifications for oil are causing some pretty widespread ripples?
Yeah, there's not a lot he can do, Lisa. I mean, he can say we're going to get our hands around the gridlocked ports in LA and Long Beach. But I thought, frankly, the big development in what he said last night was a clear shift to the center. The left-wing stuff wasn't working. They faced a terrible election in November. So he barely mentioned Build Back Better. He rejected totally the idea of defund the police. And I think he tried to appeal to a more centrist group of voters.
Okay, so he tried to appeal to a centrist group of voters as his approval rating plunges to the lowest in his presidency. Is it enough to change the conversation heading into midterms?
I don't think so. If Ukraine turns out to be a glorious victory and a huge setback from Putin, maybe Biden gets some credit. But I think the big issue still for most voters is the economy in general and inflation in particular. And the inflation story, whether it's energy or grain, which has sort of been overlooked, I think an awful lot of commodities will continue to rise, and that's not a good story for Joe Biden.
Well, how does that story change, Greg, in midterms to Labor Day and into October to the election? All of a sudden, John Farrell, this is the first time I've ever said this, and that we're really looking at a sustained inflation scenario beyond the distance. All of a sudden, we're going to be there, aren't we, Greg?
Yeah, and you know, you raise a good point, Tom. Most studies have shown that attitudes, public attitudes, tend to harden by summer before an election. So even if inflation starts to look a little better in September or October, I think it's too late to help Biden.
Greg Valliere of AGF, thank you, sir. Just working at Bloomberg to take us down to March 10th. March 10th, of course, is when that next CPI print comes. I'll bring you that estimate, Tom. The estimate so far, 7.8%. Not many estimates are in right now. We only have 3 on the screen. Morgan Stanley being one of them at 8%.
John, help me here, because you've been better on Italy, Belgium, and the rest of it. But the basic line is every inflation survey we've seen has come in above the survey.
Particularly in Europe. Still getting upside surprises, Tom. Yeah, I'm with you.
I mean, I think that's where we are. And I'll be honest, John, I see it within, you know, my old amateur view of real estate like everybody else, you. And I'm never below 59th Street, John, so I don't know what real estate's like near you. But you know, the bottom line is I believe real estate's still going up.
Don't you have to use 58th to enter the building, Tom?
No, I go in through 59. I have a special entrance.
Right? Special entrance. Looking at futures of 1/3%. Lisa, I know you've been following this story over at Gazprom. So this is the Russian state-controlled energy giant. There are some coupon payments, some principal payments as well coming due out of Russia in the next few weeks and months that we need to keep an eye on. Already in the process of settling a $1.3 billion debt due on Monday. So this is how it reads at the moment from the team here at Bloomberg. The company wired the cash on February 28th to the settlement bank, which will probably release the funds on March 4th. A person familiar with the matter said. Now, the second piece of that line, Lisa, is the important piece of that line.
Yeah, the idea here probably going to release the funds, because we know that Russia has banned the release of coupon payments to foreign investors, and then you have companies that want to remain part of the system, right? How do you deal with this if you're a company in Russia, and how do we evolve post this crisis to a new regime?
So just to be really specific, what they've banned are coupon payments to foreigners on local government bonds. And this is a dollar payment. So we need to be really careful about this, Tom, in the coming weeks and months, just to be really on top of the detail.
Well, we're on top of the details, but I want to be top of the data. Brent crude, 6 cents from 114, John.
112 at WTI. There's a lift here. We're up more than 8% on crude now. 111.92. We need to break down some data with Mike McKee, look ahead to Chairman Powell, who we've barely discussed today, and then catch up with Deutsche Bank in a couple of seconds. David Folkers-Landau, just around the corner from New York. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
$20.11 highs on crude. Futures now at 0.4%. Crude looks like this. WTI 111.30, up by 7.6%. With some breaking headlines on Chairman Powell. Here's Mike McKee.
Good morning, John. We have the prepared text from the Fed chairman, and he basically confirms what everybody on Wall Street is betting on, saying with inflation well above 2% and a strong labor market, we expect it will be appropriate to raise the target range for the federal funds rate at our meeting later this month. He does not say by how much, so you can still guess about that, although investors have priced out the idea of a 50 basis point move at this point. Powell goes on to repeat rates first. Reducing our balance sheet will commence after the process of raising interest rates has begun and will proceed in a predictable manner, primarily through adjustments to reinvestments. And assessing the economy, the chairman notes that the rapid spread of the Omicron variant led to some slowing in economic activity earlier this year, but now cases are declining and the slowdown seems to have been brief. The labor market, extremely tight, employers having difficulty filling openings. An unprecedented number of workers are quitting, and wages are rising at their fastest pace in many years, he says. And inflation, as he suggested earlier, increased sharply last year, now running well above the longer-run objective of 2% because demand is strong and bottlenecks and supply constraints are limiting how quickly production can respond. He doesn't say the word transitory, but he gives you the impression that the Fed is still buying that argument. And finally, he brings up the invasion of Ukraine. He actually mentions it in his opening remark and then brings it up later in the context of the U.S. economy, saying the near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war, the sanctions, and of events to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition that the economy evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. Basically, what I had suggested earlier on the early edition of Surveillance, he's going to give us details on what the Fed's going to do without giving details because he doesn't want to get locked into anything with all this uncertainty out there.
Mike McKee, thank you, buddy. As always, Tom, they don't want to make a forecast, but guess what? On March 16th, they have to release some forecasts.
They're going to have a data dependency to that point, and of course we see it now with the 10-year yield up 5 basis points this morning. This is a joy. Lawrence Summers scheduled to be with us here, the former Secretary of Treasury. But before that, David Folkerts-Landau joins us to say he's chief economist of Deutsche Bank, barely describes his contribution to economics, and I think of Michael Dooley, David Folkerts-Landau, and Peter Garber and their important research on intervention of 2 decades ago. DFL, you and others at Deutsche Bank are talking very seriously about a need to intervene here. The weak euro intervention of another time and place was 85 cents, 90 cents. Now you're talking intervention at 110. Why is that?
Well, it's a question of how to control inflation without doing too much damage. And the easiest way and the most effective way to do that would be for the European Central Bank to raise rates or to find some way of talking rates up and indicating that that's what they will do. You'll recall that when they went negative in 2014, the dollar appreciated from somewhere around 136 to 110 in a matter of 9 months. And so any move now to increase rates and to signal that they will be going positive would precipitate a very, very quick dollar depreciation, which would, of course, be great for inflation within Europe, which will be one of the main problems they will have given what's in the pipeline now.
Let's go to Rudiger Dornbusch and Ken Rogoff. They would suggest a less coordinated intervention will not be effective. Do you see this as a singular EU effort, or would it be coordinated?
There is not a chance in the world that we will get a coordinated intervention, even in times like this, with a door on Europe's doorstep. Those days are gone. I think not even a direct intervention for the sake of moving the exchange rate is something that I think the ECB would do. It's more a question of indicating concern and changing the tonality around that rather than direct intervention. I think that's just not in the cards right now.
So what would they have to say? I mean, is this basically them coming out and saying there are no rate hikes on the horizon, we're going to continue all of our emergency purchases in full for a prolonged period of time, and we have your back? Is that basically the idea? I mean, that would weaken the currency. It wouldn't necessarily strengthen it. So what could they even say?
No, I think they would have to go back to the narrative of saying that we will raise rates this year because inflation is our top priority and our main objective. And that'll be reflected, hopefully, in their inflation forecast. And we have inflation in Europe somewhere around 6.5% for this year. And that number just cannot stand without being confronted with the policy. They should admit that, they will undoubtedly, and say that we will now start thinking about moving this year, and rather than pushing it further out.
Well, would that be enough, though, David? And the reason why I ask this is because we've got an increasing number of analysts and economists coming on and saying we're getting to the point where central banks lack the ability to really influence inflation and even growth, given some of the exogenous shocks. Do you think that that will actually make a difference, a sort of tighter verbiage, at least, from the ECB at a time when the economy is getting hammered by some of the pressures from the invasion?
No, there's no doubt. If it went for the exchange rate, that raising rates themselves, it would feed slowly through the economy, of course, to impact on demand, impact on credit availability, and things like that. But the exchange rate impact will be dramatic and it will be fast. So that's why I said at the outset that the best tool for them available is to talk up the exchange rate as best as they can. They will do that by giving the market greater certainty and greater conviction that they will raise rates and that they will think in terms of moving towards a positive depo rate this year or certainly very early next year. That certainty is important. And I think that you would see an immediately beneficial effect for the exchange rate and immediate feed through inflation. It would make it much easier for them to macro manage the economy.
David, ruble to 113, Brent crude to 113 as well. That's just by convenience. And the answer is these are shocks to the system. As they filter through to the balance sheets and to the write-downs to come, is commercial banking in Europe at risk?
No, not at all. I think commercial banking in Europe has improved tremendously in terms of quality of balance sheet, quality of earnings. So I don't think that's an issue. Now, clearly, like any other industry, these shocks will affect the banking system. But in terms of a serious impairment, I don't think that's an issue. But basically, there are two big forces in Europe right now. One of them is the inflationary impact of the oil price, energy price increases, and what that will do to aggregate demand, to production, manufacturing, and so that's clearly a big shock. But on the other hand, you have to remember there's also a massive positive demand shock coming from the rearmament in Europe, and particularly in Germany. We're talking about 100 billion, not all in 1 year, obviously, but the amounts of money that are now in play, particularly the early the quick disbursement coming out of the European funds, are such that this is a very serious stimulus. So these are the two forces. On the one hand, you have the deflationary force coming from the energy price increase. On the other hand, you have the stimulative force coming from the fiscal expenditure, which is close to as much as the Americans did, not quite, but it's a very, very significant impulse.
What is the significance of Euro 116? Long ago, far away, and you were directly involved with this, was the pricing of a euro in a much more peaceful, maybe an ancient time as well. If we see intervention, if we balance off against strong dollar, it's not 1978, it's not the financial crisis as well. Here we are at 111. Is 116 the fair value of euro?
No. Ultimately, once the ECB indicates credibly that it'll move positive on a depo rate, and that increases, we would expect the euro to go right through 120 into the 130s. So it'll be a dramatic change, just the way it happened in 2014 on the other way around. And that's something we're quite confident about. So there's nothing special about 116. It is, in fact, a lot higher than that.
Regardless of what the ECB does, your comments on fiscal spending and, frankly, Germany's pledge to actually meet that 2% or more target for military spending is really notable. Do you think that because of some of these fiscal expenditures, that talks of stagflation in Europe are perhaps overblown? Yes, they're
definitely overblown. I think that when I look at the press and I listen to what everybody's saying, the impact of that additional expenditure will be quite dramatic because it will support manufacturing all across, and it'll be spent very widely. And also the money's coming out of the Recovery and Resilience Fund, the quick disbursements there. For instance, Italy is already on the way to spending $6 billion just for income maintenance to cope with gas price increases. That is income immediately. And so we will see a big impulse, fiscal impulse coming from that. So yeah, so my sense is I do not expect that the Ukraine and the subsequent price increases in oil and gas and commodities, agricultural as well, will have more than 0.5% impact on the European on growth within the Eurozone. Not much more than that.
What would have to happen? What would have to happen, David, for you to rethink that, for you to think that perhaps the impact of higher commodity costs will have a greater effect on the prospects of growth?
There is a 700-pound gorilla in the room, and that is if Nord Stream 1, the gas pipeline, gets disrupted. In other words, if either the Europeans are no longer able to or want to buy the gas and oil from Russia, or Russia cuts them off. Either way, that will be a very, very significant shock. Europe gets 40% of its gas from Russia, Germany more. If that gets cut off, then you will have to see some form of prioritization. Households come first, industry comes last, and you will have a very serious recession in that case. So that, I think, is something that you can sort of see it playing into the market now. And what might drive this is, surprisingly enough, is social media. This is the first major war that we see all around the world in social media. The Russians attack Kiev, which they will shortly, and other cities. Everything that goes on, you will find per video around the world. That will create enormous pressure to stop buying oil and gas from Russia. And if that gets cut off, then I think we will see a much more significant impact in Europe than we've seen so far.
David, thank you, sir. As always, David Folkers-Landau there of Deutsche Bank. Some really important points on Europe and the risks, the tail risk around the story of the moment. Crude right now, 111.60 on WTI. Tom, 113.44 on Brent.
Yeah, there's a lift to them, and they are discrete and separate. John, can we agree that Chairman Powell really didn't move the markets? I got a little bit of a lift in yields, but that's it, right?
No, for me, he doesn't want to make a forecast, Tom.
Yeah.
They're going to put out a dot plot on March 16th. They've got no choice but to make a forecast in a couple of weeks.
I'm going to say this, John, and a very, very challenging here, in that I don't have good attribution, but that's what happens in a war zone. But the social media feed, as Dr. Folkers-Landau mentions, the importance of it is remarkably grim off the Sea of Azov at Mariupol. We do not have direct attribution on that, but that's something to pay attention to in the morning.
It is ugly. Just getting some reporting from Sky News, Sky Sports, on the situation with Chelsea Football Club. Roman Abramovich seeking 3 billion sterling, a 3 billion sterling price tag on Chelsea. The bid deadline, Tom, middle of March. This is how quickly these asset sales have got to move.
Oh, we'll talk about that. That's important. That is a huge
Coming
asset.
up on the Open, Katie Kaminsky, Chief Investor, Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport
As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Clearly, the Ukrainians have done very, very well up to this point, but it's the first inning in a 9-inning ball game. The Russians will just continue to hammer and hammer and hammer away at you in places such as cities. They don't worry about casualties. They don't worry about collateral damage. They don't worry about infrastructure.
The infantry officer and artillery commander of the United States Army, General Kimmett, retired brigadier general there, in a stunning interview yesterday on urban warfare. I really recommend that you take time to listen to good General Kimmett. As we speak to David Folkets-Landau and others about this crisis and how it folds into the American economy now, Lawrence Summers joins us. He is at Harvard University and, of course, the former Secretary of Treasury of the United States. Professor Summers, thank you so much for joining this morning. I want to go back to McChesney Martin and Truman. I want to go back to McChesney Martin and Johnson in war. What should a chairman of the Federal Reserve System do in a time of crisis in war? Stay on plan or amend to the politicians?
Let me just first say that I was very proud of our president last night. I thought the way in which he spoke to the stakes of what we're involved in Ukraine, what we're involved in, and what the obligation of the United States is to uphold world order at a moment like this was profoundly important and profoundly inspiring. We're going to talk about economic and financial stuff in just a minute, Tom, and I'm happy to do that. But the real stakes are in freedom, in the maintenance of civilization, in the resistance to naked aggression. And history is going to remember that a lot longer than it's going to remember anything with the Fed funds rate.
Larry, I think a lot of people would agree with you. Oh, I'm sorry, so sorry. But to follow on, to really get to the Fed funds rate, you know, what is the cost the U.S. is willing to bear when you talk about exactly preserving those freedoms and then the Fed's role in trying to tamp down? Have they already missed the boat on that?
I think the Fed's been very late. I think it's been way behind the curve. And I think one of the reasons why it's costly when you're behind the curve is that sometimes you can get shocks that make it harder for you to act. But I don't think the Fed has any alternative now but to mount a strong response to inflation at a time when I think we are at or over the brink of a spiral of rising inflation breaking out. You're seeing that in the numbers for expected inflation over the next year or over the next couple of years. The place you're seeing it most clearly is in the wage data and the data on vacancies, which are pointing to wage inflation at close to 6%. And pressures for that to accelerate. And I think that needs to be ringing all the alarm bells at the Fed.
Yeah.
So I think there's much more risk of the Fed doing too little than there is of the Fed doing too much at a moment like this. I think the Fed's obsession with a high-pressure economy was way excessive because they didn't think about how pressured an economy we were going to be able to have over the longer term. And I think the next recession probably has mistaken monetary policy written all over it.
Larry, there was a discussion about this before the invasion of Ukraine by Russia, that perhaps the Fed was way too late and had to move very quickly. Now the suggestion coming from markets is that even if the Fed moves quickly, it's not going to matter in terms of staving off a near-term recession. It's not going to matter in terms of landing this economy in a more controlled way. Do you agree with that sentiment?
I think the difficulty of getting a soft landing where we both brought inflation down and we avoided recession was always very difficult. And I think with $110 oil, it is that much more difficult. And so I think we're going to have to, if we want to bring down inflation and we don't have a financial accident, we're going to need to see interest rates higher than the Fed or markets are now pricing in.
Larry, David Folkerts-Landau, of course, of the academics of Dooley, Folkerts-Landau, and Garber, and at Deutsche Bank now, is suggesting the EU will need intervention to see strong dollar become a weaker dollar. He's worried about too weak of a euro as well. He made very clear that this time around it is a less than coordinated intervention. Can a singular intervention work at any time and place?
I don't think the track record on currency interventions is very encouraging. I don't envision that you're likely to see a currency intervention by the United States to weaken the dollar, nor is that something that I would advocate. Very much the contrary. I suspect that Europe's that the more relevant tool is the use of monetary policy rather than currency intervention.
Professor Summers, thank you so much. The former Secretary of Treasury of the United States, Lawrence Summers, always from Harvard as well. Lisa, what do you see on the screen right now? I see a nice churn going on.
Right now, I'm just trying to comprehend what we're looking at in terms of oil prices and how you game that out in terms of growth. Just thinking again about the Amrita Sen quote that really stands out to me. What is the breaking point that actually is a self-correcting cycle? What's the price that you need to see on oil before demand destruction really starts to take place? Is it $170 a barrel?
Right.
What does that mean for the global economy?
Here is new data just in, Lisa. This on the Bloomberg, and of course it is from the American Automobile Association. Lisa, I'm going to go back to last Friday. $3.60, $3.61 by Sunday, $3.62, and a near 3-cent jump that we saw yesterday to $3.66. And you wonder here at Brent 113 where that statistic will be tomorrow.
Yeah, especially because it's not just Brent, right? We're talking about, if you take a look more globally and how this really factors into demand, it's also wheat. It's also aluminum. It's the whole commodity complex that's getting disrupted, Tom. How does that feed into growth and consumer discretionary spending and demand?
And I wonder, Lisa, you know, we haven't made jokes about it. This is not a time for jokes. But with the sanctions and soft sanctions we see and the instabilities, you wonder how the auction process, frankly, in the United States will go. We have this belief that we're removed. Are we?
How do you make a price amid such uncertainty?
Yeah.
And that's what we hear from a lot of people who are stepping back and just waiting for a little bit more clarity.
We thank our team for an extraordinary day of conversation, particularly the effort in Europe on the border of Poland and Ukraine. We continue forward here with futures up 10, Dow futures up 106 as well, but challenges in oil. Brent crude rounded up 113 a barrel. Please stay with us. This is Bloomberg. Good morning.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Crude at 2011 highs from New York City this morning. Good morning, good morning. Futures positive, just about. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue: strong words and unintended consequences. President Biden with a message for Russia's leader.
Putin is now isolated from the world more than he has ever been. And I'm taking robust action to make sure the pain of our sanctions is targeted at the Russian economy. Together, along with our allies, we are right now enforcing powerful economic sanctions. We're cutting off Russia's largest banks in the international financial system. We're choking Russia's access to technology that will sap its economic strength and weaken its military.
A growing list of sanctions intended to leave Russian energy untouched. But oil giants Shell, BP and now Exxon are leaving the country behind, and Russian crude sales are increasingly under an embargo in all but name. Bloomberg reporting the following, that on Tuesday, Trafigura Group, an oil trading giant, offered to sell a cargo of the nation's flagship crude for $18.60 a barrel less than an international benchmark. The deepest discount ever, but still drew no bids. Supply fears are driving crude to new highs and taking other commodities with them. European gas has surged and wheat has rallied through highs not seen since 2008. Our team coverage begins right now. Bloomberg's Anne-Marie down in D.C., Maria Tadeo in Brussels. Anne-Marie, through 110, how much of a problem is that?
It's a massive problem. When you look at WTI going through $110 a barrel, Jonathan, how does this trickle down to the American consumer as this administration tries to fight inflation? It's going to end up on the supply chain. It's going to end up at the gasoline pump. You mentioned wheat. That is going to be a global inflationary problem for food shortages and the likes. Jonathan, what we saw from this administration, the president reiterated it yesterday, 60 million barrels, 30 million coming from the United States in terms of the Strategic Petroleum Reserve. The issue is that would work if we lose, say, 2 million barrels off the market a day for a month. The issue right now, and you called it an embargo all in name, individuals are self-sanctioning. It is very difficult right now to try to get refiners, ships to go get, to process Russian oil.
Energy Aspects pointing out, AMH, that about 70% of Russian crude is now struggling to find buyers. When you speak to people in Washington, the energy experts, do they think this is something that gets ironed out in the coming days and weeks, or something we might have to live with?
Well, at the moment, Jonathan, they'll just remind you that energy trades are right now not under embargo. They're not sanctioned. They have these carve-outs for this reason exactly. They want to make sure that Russian oil maintains on the market because it is a global market, and they don't want to see the risk, the geopolitical price rising in the oil market. So right now, they're probably going to try to clarify what those carve-outs actually mean. The issue is people are self-sanctioning. They don't want to deal with what could potentially be toxic assets in Putin's Russia. Or potentially, the administration has said energy is on the table. So what if you decide to make a transaction in 2 weeks' time? Are you then going to have to lose it? It is just becoming too fluid of a situation, and no one wants to touch it.
This is theory meeting reality, and to your point, from Energy Aspects and Amrita Sen, several ship owners reportedly unwilling to make bookings from the Baltic or Black Sea due to the lack of war insurance. This conversation's changed quickly. Maria Tadeo, the conversation on the ground in Ukraine changing quickly as well. What's your latest read on the current situation?
It is, and to Anne-Marie's point, we know that there will be a finance ministers meeting here in Brussels, and one of the debates and one of the talking points will be what to do with energy in Europe and what to do with sanctions. Is that the next frontier? And if it is, well, you can see why for consumers is going to be problematic. And in fact, to me, it's very telling that we now hear from the German, the French, the Italian, the Spanish leadership say this war is going to go on for long and it will have repercussions, and we need to be aware that this will have an economic impact. Now, that is on the economy. When you look on the political front, Jonathan, we have reports suggesting that perhaps today the Russian and the Ukrainian delegation could meet again. Remember, they met on Monday. There was no conclusion from that meeting. It's unclear where they would meet. There were reports at one point suggesting that it could happen in Poland. We know the Ukrainians do not want to go to Belarus. They fear for their safety. They fear this is a trap. But the reality is, even if you get the two sides to agree on a location at time and they sit down, the problem is Vladimir Putin says, my goals here is to get rid of Zelensky, who is now an icon in Ukraine, to take the weapons away from Ukraine, which the Ukrainians say they are not going to do as long as the war is still happening. And then secondly, ditch that NATO and EU membership pledge. The problem is, of course, is that the Ukrainian government has already filed from EU membership yesterday, and they continue to say NATO at one point is going to have to help one way or another, whether that means shutting down the skies. Well, that was one option, and then potentially down the line accepting this membership from Ukraine. So even if they meet, they're so far away, it's very difficult to see at this point on day 7, with people being shelled on a daily basis, how they agree on a diplomatic solution going forward.
Maria, thank you. Maria Tadeo over in Brussels, Anne-Marie down in DC. AMH will touch base a little bit later this hour. You're all familiar with this stat. Europe depends on Russia for about a quarter of its crude, a third of its natural gas. That gets tons of attention. This line doesn't get enough. Russia and Ukraine supply more than a quarter of the world wheat exports, 1/5 of corn sales, plus about 80% of sunflower and oil cargoes. What are the economic and political consequences of that worldwide? Let's get into that right now with Ironside's Barry Knapp, Invesco's Mo Hagbin, and Katie Kaminsky of Alpha Simplex. Katie, the consequences of crude through 110 for this market, what are they?
I mean, this is serious. We've seen a massive move, and all of these price increases are going to trickle down at some point. We already had a massive headwind of inflation on the commodity sector. This is really going to put even further pressure, and wheat is yet another asset where we've seen sort of massive movements in terms of price momentum. And all of this is just going to eventually create some challenges for other sectors of the economy. And it doesn't look like it's going to stop if this conflict is not going to be resolved in a steady fashion.
Well, Barry, when you have conversations about the resolution of this conflict, do any of you, your team, people you speak to, can you come up with an off-ramp for President Putin?
No, not really, John. It's hard to see how this resolves itself without, in a truly favorable way, without Putin somehow getting removed by the oligarchs. So that's highly speculative. I just don't see an easy off-ramp.
Well, Barry, if there's not an easy off-ramp, Do you have to assume it gets worse before it gets better? If you assume it gets worse before it gets better, do you assume energy's on the table for sanctions? If you assume that, do you assume crude has to go higher?
Yes. Listen, there was always a fairly big imbalance in crude, and as Omicron faded, we still hadn't gotten jet fuel or jet demand back to where it had been. So there was a supply and demand imbalance. I've never been longer energy stocks in my life than I am now, and that whole process started a year ago. That imbalance has been building. We had a sort of a flash sell-off back in October when Omicron took the headlines, but no, this is an ongoing problem. So then the question becomes, and it's a question you've been asking all morning. First of all, where do we get demand destruction? And I hear some estimates from fairly credible sources of 135 to 140 or so on crude before it really starts to impact consumption in the U.S. And then what do the stocks reflect? And I asked an old colleague of mine from Barclays about that yesterday, and he said for the E&P names, it's something like 65 or 70 is the embedded, or implicit price in U.S. E&P names. So, even if we were to get some sort of a resolution and, you had a sell-off in crude, the stocks are still attractive.
Well, in the meantime, we're seeing some of the big oil majors back away from Russia. BP, Shell, Exxon, now Trafigura reviewing options for its passive holding in an oil project in Russia as well. Mo Hagbin is just lining up to back away from Russia. In the meantime, crude is just backing up higher. 111 on Brent, 109 on WTI. We're off session highs. I'm trying to work through this, and Mo, help me with all of this. The commodity community now are telling me that we need to see demand destruction to rebalance this market. If that's what the commodity community is saying, on the equity side, do we need to assume that forecasts need to come down as well for earnings in America, worldwide?
Yeah, look, it's an interesting question, and I think, the humanitarian crisis on the ground is what we're watching first and foremost. But as we think about markets, commodities is an area that we're watching very closely, obviously with energy, but also with industrial metals, as well as agriculture, which, as you know, wheat and corn are big agriculture markets for both Russia and Ukraine. We don't necessarily think that the spillover effects of the equity market, at least at this point, is something that we're positioning for. We continue to be slightly overweight equity, although defensive equity. So we've kind of gone up in quality and low volatility and up in the market cap in the equity portfolio. And we ballast that with the long duration or, an overweight to duration on the long end of the curve. So today we are not really positioning for that spillover into the equity markets, John.
Katie, Citi just published this. I want to bring that to all three of you, and we can build on this through the program. Citi and Andrew Hollenhorst say the following: we strongly disagree with yesterday's pricing out of rate hikes. To the contrary, we expect the most durable U.S. economic implication of geopolitical tensions to be more inflationary pressure and consequently more aggressive monetary tightening. That from Citi in the last hour. Katie, do you agree with that?
Yes, I have to say that I do, because if you look at the mismatch, and if you look at the technical signals in terms of where we are with numbers and inflation so high and interest rates so low, there's going to be constant pressure on central bankers to tighten that gap. And what I think about this recent environment, what was really interesting is, yes, we saw bonds rally yesterday out of a pure risk-off trade. But the truth is, even if there's a risk-off trade on the table, who's going to want to hold bonds for long term if inflation is at 7 and could go higher now because we're going to have more supply problems, and energy is one of the core at the core of our economy. So I think things are looking a little bit rough, and I think that the Fed is actually even a harder place than where they were before. And so I do believe that they will have to react. It may just not be as quickly, but they will have to do something at some point.
Chairman Powell coming up a little bit later. Futures right now at 0.4%. Katie, Barry, Mo going to be sticking with us. Let's get you some moves ahead of the opening bell. With that, here's Abby.
Morning, John. And sticking with the surge in commodities after the Bloomberg Commodity Index yesterday up the most since 2009. We're seeing that, as you are all talking about today, once again with oil at its highest level since 2011. And this is really showing up in the energy complex. ExxonMobil, Devon Energy, Schlumberger, and Valero. So the entire spectrum just surging surging higher, up more than 1%. Really pretty incredible. And it's extending right into the metals, too. Aluminum at another all-time high. We have Freeport-McMoRan and other metal and miners. Steel stocks also surging. Really, this is the bullish part of this surge for the commodities. It's interesting, John, that 2009 buying, that was on green shoots, but today it's, of course, on these supply fears.
Abby, thank you. Coming up on this program, President Biden pulling the trigger on a second release of American crude.
The United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. America will lead that effort.
And so far, it hasn't made much of a difference. That's next.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Russia invades Ukraine.
We have proven our strength.
The nature of this war changed yesterday.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
Ground troops are closing in on the Ukrainian capital.
Swiss abandon neutrality.
And analysis of what it all means to you.
Energy is on the table.
We could see oil prices moving closer to 120.
There is a lot of interest to offload Russian assets.
Look to see more companies announce their exits from Russia.
Keep it tuned to Bloomberg Television and Radio.
Invading a foreign country has cost around the world. Tonight, I can announce the United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. We stand ready to do more if necessary, united with our allies.
Is it enough? OPEC Plus joins in, raising its production by 400,000 barrels a day. Those efforts doing little to cool prices, with crude surging past 110. Energy Aspects Amrita Sen said this is COVID in reverse. We can easily breach 150. We have genuinely never tested where prices need to be to really curtail global growth. Bloomberg's Will Kennedy joins us now. It's a conversation Amrita and myself had earlier this morning, Will. It's COVID in reverse. The reverse of spring 2020, when demand collapsed and the only way to balance the market breaching storage capacity was negative prices. Will, who are you speaking to right now about how high crude needs to go to destroy demand and rebalance this market?
What we have is a supply collapse. We have a supply collapse that is gathering pace in Russia, John. People do not want to buy Russian crude. They can't get the ships into Russia, even if they do. And traders are increasingly realizing that means that we have 5 million barrels a day of supply, which is in jeopardy unless something changes soon. So as you say, prices will go higher, and we're seeing that process today. The market is incredibly stretched. We're seeing that in the spreads between oil right now and oil for a couple of months in the future at extraordinary levels. And it doesn't seem that there's much to stop the market until, as you say, people stop consuming because it's too expensive. Where that is, well, we don't know yet.
And Rita said maybe 150, 170, we don't know because we've never tested the theory before. Will, the numbers that came out of Energy Aspects, about 70% of Russian crude is now struggling to find buyers. Is that a boycott, Will? Is that a misunderstanding or a lack of understanding about what the sanctions are? Well, the reason I ask those questions is because I'm trying to work out if that's a story that sticks or fades in the coming weeks.
It's a really good question. I think there are three things going on right now, John. Number one, although oil isn't sanctioned, people are afraid of falling foul of the financial sanctions and the banking sanctions, and there's a lot of effort by compliance departments to understand what they can and can't do in terms of moving money around to buy oil. There's a reluctance from banks, some for that reason, to finance these transactions. There's a reluctance of ship owners to go to Russian ports, and that's a big part of this problem. And finally, among many players, there's a moral revulsion, if you like, or a reputational worry about doing business with Russia. You put all those things together, and it's really shrunk the universe of buyers. Now, Amrita made this point in one of her notes, which is, as we go forward, as some of those issues around what the sanctions actually are resolved, I think she expects quite reasonably that Asian buyers especially will start buying Urals, Russian crude again, because it's cheap and they need the oil. There's a huge demand for it. So I think it is bad right now, but it probably will abate somewhat over the coming weeks. But that said, even if it's only 30% of Russian oil that's not getting bought for all the reasons I said, that's still a massive hole in global supply that we need to fill, either through new supply from somewhere else or a reduction in demand, as you say.
A market thirsty for crude. Will, great work to you and the team. Tremendous work. Really enjoyed the reads over the last couple of weeks. That's the line from Energy Aspects. About 70% of Russian crude trade is frozen. They indicate that this will drop to less than 20% once sanctions details emerge. Kelly Kaminsky, I want to come to you. We talked about higher crude. I want to understand how you push some of that, the dynamics in the crude market, the prospect of demand destruction through the bond market. The move we saw yesterday in European bonds, Katie, massive. The UK, Germany, the US too.
Yeah, I think that was a really difficult day for the bond markets, especially for those of us that are positioned short, that are anticipating rate rises at some point. But for me, it feels like a temporary reversal to a longer term trend. Yes, I do think central bankers are going to become a little bit more wishy-washy under the stress of the situation. But on the other hand, I do think that longer term, those are going to be the right positions to be in because inflation is coming in hotter. And it's not something that's going to get better from what's going on right now with oil. And, you know, in some sense, we just have to keep and hold out and wait. But it was a tough day yesterday for European debt.
This is the story of the moment. The bond market moving off the back of what's happening more broadly in the global economy because of what's happening in Ukraine. Mo, I've barely talked about the pandemic now for a week. Hardly talked about it. And just off the radar, every single day you see more restrictions being removed across America. And this headline just crossed from Dow Jones. China exploring an exit from the zero tolerance approach to COVID. Mo, we've almost forgotten the story of the last 2 years. How important is that headline to you?
Yeah, it's interesting. It's a little bit conflicting with what we know is going on in Hong Kong, where, you know, there has been talks of another lockdown, and I think cases there have been, unlike the rest of the world, increasing and being problematic. So I think the headline itself is very important if it's true. You know, that said, you know, we're still kind of dealing with another uncertainty that, you know, isn't taking the headlines, but it's still in the background, and I think everyone is still watching that carefully as the dynamic can change quickly.
Barry Knapp, your take.
Well, I'm not surprised. It was absolutely incredibly inane policy, and there was always some expectation after the Olympics they would start backing away from that. Core goods prices are running at 11.7% year on year. They're likely to come down for sure. The issue, though, is we're moving from the first order effects of pandemic on inflation to the second order effects. And you can toss it, and really where I'm going with that is Now, housing is likely to be the big driver of inflation on, through the course of 2022. Medical care inflation is just rebounding. Education hasn't even begun yet. So you have all those effects. And then something else I wrote about this week, which central bankers are conditioned to dismiss, which is a greater probability of energy and commodity price pass-through. If we are truly going to a multipolar or deglobalized world, we could very easily go back to the 60s and 70s where energy prices did move in lockstep with service prices and goods prices, and we really had energy price pass-through. So, Larry Summers said it on your program a little bit earlier that the risk is the Fed and other central banks do too little, not too much. And this energy price and commodity price pass-through is just yet another example of that.
So let's revisit that in just a moment, Barry, because that final point you're making, I think, is critical. Mohammed made this yesterday. If a central bank loses policy flexibility, that's not a good thing. That's not a good thing at all, and we need to work out what it means for this market. Inflation due March 10th, the estimate so far for America, CPI, 7.8%. There's only 3 estimates in, but that's the survey so far, 7.8% from a previous read of 7.5. The conversation continues with Barry Knapp, Mo Hagbin, and Katie Kaminsky coming up in the morning calls, and later, from energy to technology, the list of corporations exiting Russia piling up. That conversation just around the corner from New York. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. It holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
5 minutes away from the opening bound, the state of play as follows. Equities higher by 0.5%. No real drama here, up about 1/3 of 1% on the Nasdaq. In the commodity market, 2011 highs, briefly. Very close to 114 for a moment on Brent. On crude right now, WTI 112.30 on Brent, WTI at 110.38. That's the price action. Let's get you some morning calls. Wolf Research downgrading Zoom's video to peer perform, expecting a material deceleration in revenue growth. Goldman upgrading all states to a buy from a sell, seeing a more supportive environment with pandemic-related headwinds fading. And finally, Bernstein upgrading HP Enterprise to outperform, highlighting the stock's compelling valuation and strengthening demand trends. Coming up, Exxon, Apple, Nike, a long, long list of corporations abandoning Russia. That conversation just around the corner from New York. This is Bloomberg.
airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
23 seconds away from the opening bell in New York City this morning. Good morning. This Wednesday morning, equities up 0.6%. Equities up on the Nasdaq 0.5%, on the Russell by 0.7%. A lift with crude very close to 2011 highs. Let's your opening bell, switch up the board and get to crude. We look like this on WTI. WTI right now on crude 109.77. Crude up by more than 6%. The high of the session 112.51 on Brent, very close to 114 a little bit earlier today. Euro dollar a break of 111 to the downside, a third straight day of euro weakness, 110.98, negative 0.2%. And yields higher, reversing some of yesterday's move, up by 6 basis points, approaching 180 at 178.72. That's the open behind us. 20 seconds in. Let's get you some movers. Here's Abby.
John, let's stick with that strong energy story because it is, of course, one of the top sectors on the day. The energy complex rallying with crude at these unbelievable levels on supply fears. We have the likes of ExxonMobil and ConocoPhillips and many other names sharply higher. But it's not just oil and crude, the energy complex that's rallying. It's also natural resources in general. Bayer up almost 4% in Europe, and U.S. steel up 2.2%. So this theme continues. Now, we have an overall rebound, at least right now. Will it stick? But a piece of it, of course, is big tech, which yesterday was down sharply. Apple rallying today. Salesforce.com up even more, up 3.9% on a very strong quarter and an outlook that beat Wall Street. And then the banks yesterday really beaten down. JP Morgan Chase, the big banks up just slightly, but some of the regional banks, such as KeyCorp, up even more. But KeyCorp up 2.3% today. Yesterday, down more than 8% as yields were down. So let's see whether or not the recovery continues to take hold. But certainly stocks pretty strong right now, John.
Abby, thank you. Thank you very much. We've taken so much out of the front end of the curve. Twos are back down to 143. On Friday, the high of the session, 160. In fact, 20 basis points north of where we are now. We're up 8 basis points today. Jim Bullard of the St. Louis Fed just said this. Inflation is running well above the Fed's target. The situation calls for a rapid withdrawal of accommodation. Rapid, the word that he's using. Current policy is exacerbating the inflation problem. We must follow through on rate hikes and balance sheet runoff. 143 at the front end. You just wonder how much we need to build out the front end again, because over the last couple of weeks, we've taken it all the way back down on the belief that the situation in Ukraine is going to mean the Federal Reserve can't do as much as what this market thought the Federal Reserve would do maybe a couple of weeks ago. Chairman Powell later, he might not want to provide forecasts, but on March 16th, we'll get forecasts from this Federal Reserve. Elsewhere, we have seen a growing list of corporations pulling back and abandoning Russia. The latest automaker Ford suspending operations, writing in a statement, our current interest is entirely on the safety and well-being of people in Ukraine. We won't speculate on business implications. Joining us now for more, here's Kaylee Lines.
Well, John, this list has become a laundry list. It is just company after company making these announcements. You have Ford, you also have the world's largest technology company, Apple, and the biggest athletic apparel maker, Nike, making these announcements yesterday, both of which are halting product sales in Russia after the invasion of Ukraine. This follows Hollywood studios like Walt Disney World pausing the release of new films in the region, and of course, announcements from a number of big oil players. Exxon now joining the likes of BP and Shell in exiting Russia, responding to the pressure on energy companies to do something in the face of the invasion of Ukraine, and exiting investments at a likely cost of tens of billions of dollars to do so. And adding to the list earlier today, Trafigura reviewing options for its passive holding in Vostok Oil. It had bought a 10% stake in that Russian oil project that is controlled by Rosneft back in 2020, but the company now saying it immediately froze investments in Russia following news of the violence. What it really comes down to, Don, is this dual challenge of financial risk on the one hand and reputational risk on the other. But in regard to financial risk, we also have to take a look at some of these U.S. consumer goods companies that have heavy exposure in Russia. The likes of Coca-Cola, which gets 21% of its volume in Russia and Ukraine. McDonald's, 9% of revenue. AB InBev controls 14% of the market share in those markets. And at what point do they face significant risk because of the conflict and also because of the sanctions that are resulting from the conflict that could hit the Russian consumer, John?
Kayleigh, thank you. It's a situation we need to follow for the banking industry here in the United States, not just worldwide. Citi kicking off its first Investor Day in nearly 5 years. James Fraser doing a ton with that bank very, very quickly. Bloomberg's Sonali Basak joining us now with an update. And Sonali, you're here and not there because nobody's there, right?
Yeah, they actually had to cancel the in-person event because some of the presenters had tested positive for COVID-19. Nonetheless, it is a huge moment for Jane Fraser, who off the bat had acknowledged the difficulties that the bank had faced and that they have not lived up to their full potential. If you take a look at Citigroup stock, not only has it underperformed its peers, John, it is the only bank among the major U.S. banks that is trading below its book value and meaningfully below its book value at 0.6% pretty much of its book value. So, you know, a lot of troubles over there at Citigroup. In the first couple of months of Jane Fraser's tenure, she announced a lot of cuts. She announced that she would be stepping back from certain markets and certain businesses. Now she is giving a plan for growth. But what does a new normal look like for Citigroup here, even with expanding certain business lines and investing? 11 to 12% returns on tangible common equity is less than what it made last year. It is less than what they hoped for from their prior investor day, and it is less than what you'll see over at the major banks such as Morgan Stanley, Goldman Sachs, and JP Morgan that have announced plans of 17% or higher. So this is going to be the new normal for Citigroup while we look forward. I also, though, John, want to pivot a little bit and talk about Russia and Citigroup. Russia is only about $5.4 billion worth of country exposure, less than $10 billion in total exposure for Citigroup. But Citigroup is really a interesting example here of a big global bank in Russia. Remember, since 2014, when they first started reducing their exposure to Russia, the exposure is relatively unchanged from where it was back in 2014. The country exposure is less than 0.3% of the company's total, but Citigroup, like JP Morgan and many other banks, as global transaction banks, are now sitting there with work with the central government, trying to untangle themselves from any potential sanctions that might play out through SWIFT or with the central bank or the sovereign wealth fund or otherwise.
Some of the companies are just taking a stance. ING Group this morning over in the Netherlands, Sonali said this: we have decided not to do any new business with any Russian companies. Now, new, obviously the operative word there, the important word. Have we seen any American bank on Wall Street take that stance?
Well, we have seen them step back over a number of years. We've seen banking leaders over the last couple of years, though not this year, take a strong vocal step back from doing any business with the Russian government. But with that said, remember, there's a joke on Wall Street that the big U.S. banks are semi-utilities here, and they move where the government goes. So until there are stronger sanctions, and until actually some of the sanctions that have already been announced are cleared up, it's going to be difficult to figure out how to untangle them from the Russian financial system.
We need to clear that up. Sonali, great work, as always. Sonali Basak on top of Wall Street, as you'd expect. So what have we got here? Early days of forced liquidations, potentially boycotts as well, companies stepping back for this perceived moral obligation that they're talking about as well. Mo Hagbin, the selling hasn't even started. BP wants to offload its Rosneft stake. Let's see if they can and for what price. I saw Roman Abramovich in the UK trying to sell Chelsea Football Club. Again, he's got a price, but he's got a target of the middle of this month. Let's see if he gets the number he'd like. Mo, it just seems to me that this is the start of a process. From the people that I speak to, knee-deep in emerging markets, that's what they keep telling me. It's the start of the process. We haven't seen all the moves yet. Would you agree?
Yeah, I think that's right. I mean, I think one of the things that is going to be important is the ability to transact, right? And as we know today, very difficult both on the equity side and the debt side to transact. So thinking about your investments in emerging markets, specifically Russia, and how do you actually manage that? I think one of the major things that would have to happen in order for that to clear up, or for that to be more pronounced across kind of the asset management community, would obviously be country inclusion in several of the indices. So until that gets sorted out and the markets open so that you can actually transact, you're basically sitting on your current position.
A lot of people looking to JP Morgan for some of those decisions to be made maybe soon. Mo, the framework that you've got at the moment, just positioned for a slowdown cross-asset through the portfolio, is that the approach? Does that approach stick even with the dislocations we've seen over the last couple of weeks?
Yeah, look, I mean, that was the positioning before this invasion and war. So, we're sticking to that. And what's important about that is not only what we believe is kind of the environment in a slowdown for risk assets, right? Generally speaking, there's a convergence and there's very little dispersion around risk assets, but still positive in all cases. But what we do is we get defensive, right? So we've gotten defensive on the equity side. And as I mentioned earlier, and I mentioned on the last time I was on, we've had an overweight to duration, right, in the long end of the curve. And we continue to believe that the yield curve will flatten.
Invert by year end, Mo? Would you go that far?
I don't know if I'd go that far. I think we still have about a 75 basis point spread between 2s and 30s, but flattening, absolutely. We don't see that long end of the curve moving. It's anchored.
Katie, I get the feeling a lot of this resonates with you.
Yes, I mean, I think my challenge has been that we've been neutral to negative on equities to some degree, because we tend to be a little bit on the faster end and more technical signal basis, but cross-asset signals have been very interesting to follow this year. We've seen a lot of pressure on fixed income. We've seen massive signals in commodities, and I think for the equity markets, you have to ask yourself, what looks good? Maybe the Fed being nicer or easier for a short period of time, but there's a lot of things that are going to have to be sorted out. So there's a lot of things that are kind of piled up against the equity markets. So I tend to be a little bit more concerned that this is not really the year of great equity returns yet, until I see some other indications.
Barry Knapp, the final word. Have you heard enough from enough bears to get bullish?
Oh, yeah. This was in our forecast. When the Fed starts normalizing policy, you get 10 to 12% corrections. Every business cycle since World War II, you had one of them. Last cycle, you had 8 of them. We expected this to be the first trade out of the gates in 2022. We've got it. We think we've had an appropriate adjustment to Fed policy normalization. The typical pattern is you'll recover. The market will trade in a range for a quarter or so, and then we'll be back on our way through the rest of the business cycle. So for me, this is a buying opportunity. When you get a chance to put money to work in the S&P anywhere around 4,200, you need to be doing it. You need to be getting into the reflationary sectors. We're moving towards deglobalization, a big capital spending boom, industrials, energy, materials, financials, all of those sectors. This is what investors should be doing into this week.
Barry, I've heard you say that a few times over the last 12 months. That's your big theme. Do you get the feeling what we've experienced in the last week just accelerates that then?
For sure. This is, again, this is what happens when the Fed starts normalizing policy. So we're going to get this risk off. We were always going to have a difficult environment in the first half of the year. But these are your best entry points for most investors. That obviously the recession-related low is a great entry point. Most people don't do it. But then if you think about the drawdown we had after QE1 in 2010 or QE2 in 2011, those are excellent entry points to put some serious capital to work. Sure, it's going to be a difficult environment as the Fed withdraws liquidity, but you know, it's never terminal for the business cycle. And if Larry Summers is right, the Fed's going to do too little, not too much. Eventually that'll catch up to him. But I don't think Jerome Powell's about to evolve into Paul Volcker anytime soon and overdo it and drive us into recession. That just doesn't make all that much sense at this stage. So equities are still a much better bet than fixed income, than long duration. In a lot of ways, we think this is going to look like the early 60s where bond returns are negative. The 60-40 model, although that wasn't really a thing back then, broke down. But equities can earn out pretty strong earnings growth because nominal GDP is likely to be much stronger than it was last cycle, which means stronger trend earnings growth.
Barry, good to catch up, buddy, as always. Barry Knapp, to Mo Hagbin, thank you, sir, and to Katie Kaminsky. Your equity market up 0.75%, 43.38 on the S&P, up about 32 points. Coming up, President Biden vowing to confront Russia over the invasion of Ukraine.
A Russian dictator invading a foreign country has cost around the world.
More on the President's State of the Union address next.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
A Russian dictator invading a foreign country has cost around the world. And I'm taking robust action to make sure the pain of our sanctions is targeted at Russian economy.
President Biden condemning Russia's Putin and meeting rare bipartisan approval. A different story for his domestic agenda, with Iowa Governor Kim Reynolds blasting the administration for surging prices.
They were warned that spending trillions would lead to soaring inflation. They were told that their anti-energy policies would send gas prices to new heights, but they plowed ahead anyway, raising the price at the pump by 50% and pushing inflation to a 40-year high.
And Marie, down in DC, AMH, how well received has that message been in the last 12 hours?
Well, Jonathan, the start of the president's speech was really the centerpiece in the sense that this is where he was able to get bipartisan support. And we should note the Ukrainian ambassador to the United States, Oksana Markarova, really stole the show. Every single member of that chamber stood up and clapped for her. So this was really a pivotal moment of his speech, a speech that had to be reworked because obviously this president is now the 7th day in. He's a wartime president. He had to rework that speech. When it comes to the energy story, and you heard the Republican rebuttal, the president talked about the fact that he wants to lay harsh sanctions on President Putin in a moment that was almost ad-lib because it wasn't in the pre-prepared marks. He said he doesn't even know what's coming at him, but he wants to mitigate the issues at home. And right now, that is going to be the biggest challenge, Jonathan, because what we know is that corn, wheat, oil, nickel, that goes into EVs for batteries. All of these prices are surging.
It's really difficult. Credit to the administration. Didn't embarrass its allies abroad. Europe encouraged them to go further. I think for a lot of people, AMH, European allies have gone much further with sanctions than many people thought even just a week ago. Now it gets really difficult. How do you offset some of the pain caused by the sanctions introduced and the confusion, the unintended consequences of them too? We had the reserve release yesterday. Anne-Marie, we saw this story, this movie play out last year, at the back end of last year. Same story. Crude higher again. What can they do?
Yeah, and the last year when they first decided to tap the SPR under this administration, we saw potentially maybe 10 cents off of a gallon of gasoline. I mean, that is the whole point of putting oil on the market, so you can mitigate the concerns on the gasoline pump. Jonathan, the question is, what do they do? It's very difficult. There are knock-on effects from these sanctions, even though they say that there are carve-outs for the energy trade. Potentially, I'm just thinking out loud here of something that could happen if there was an Iranian nuclear deal, Jonathan. That could potentially mean more barrels pretty immediately on the market to quell some of this. The other option, of course, is they were talking about a gas tax holiday at one point in the Congress. The issue with that is what president is going to want to then put that tax back on. It's incredibly difficult to try to mitigate these issues when this is a global marketplace when it comes to crude oil.
Anne-Marie, thank you. Down in DC, as ever, AMH crude. One away on WTI. We're back away from session highs on Brent to 110.90 after coming very close to 114 on Brent a little bit earlier this morning. Chairman Powell coming up a little bit later on Capitol Hill at the top of the hour. The quote from him looks like this: with inflation well above 2% and a strong labour market, we expect it will be appropriate to raise the target rate for the federal funds rate at our next meeting later this month. Mike McKee setting the stage for that rate hike in a couple of weeks.
Yeah, there's not a lot of bipartisan agreement in Washington, but Governor Reynolds and the president would probably both agree with the Fed chair's assertion that they're going to start raising interest rates. They need to do something about inflation, although in his prepared remarks, Jay Powell is still sticking with the transitory story, even though he doesn't come close to using the word. Here's what he says. We continue to expect inflation to decline over the course of the year as supply constraints ease and demand moderates because of the waning effects of fiscal support and the removal of monetary policy accommodation. But, he says, they are attentive to the risks that it still continues to rise, saying they'll use their policy tools as appropriate to prevent higher inflation from becoming entrenched while promoting a sustainable expansion and strong labor market. Now, he assesses the economy as in pretty good shape right now. The rapid spread of the Omicron variant led to a slowdown in January, but that seems to have proved temporary, and we're going back up again. The labor market is strong, extremely tight, he says. Companies can't find workers, people are quitting their jobs, and wages are rising. And, as he admits, they're well above their target on inflation. The one wild card he does admit to is Ukraine, saying of the Russian invasion, the near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war, the sanctions, and the events to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition the economy evolves in unexpected ways. So you can expect more questions about about Ukraine, John, from members of the committee. They'll try to drag him into who's at fault on inflation, and he'll try to avoid that.
I imagine he'll try and stick to the script and try and make this boring too. Might be key this moment, anything but boring, depressing in many ways as well. Equities session highs up more than 1% on the S&P and the Nasdaq, up by 0.75% with your sector price action. Here's Abby.
John, we are looking at a fairly robust rally. All 11 S&P 500 sectors are higher, not surprisingly led once again by energy as oil continues to surge right now at 2013 levels. Financials also popping, a recovery there with yields up on those Fed Chair Jay Powell remarks. But you can see, again, all 11 sectors are higher, including discretionary, tech. So investors want back in. We are buying the dip, at least today, at least this morning. As for the last 5 days, and let's see what the effect really is of the Russia-Ukraine war, you can see energy really the top sector, up more than 8%. Metals and mining, though, too. That's that natural resources story on the supply shortage, supply fears. And then banks with yields being going down as bonds are bid, excuse me. You can see financials and the KBW Bank Index over the last 5 days down sharply. All this can change any moment. Volatility, the name of the game, but
of course,
yes.
Session highs right now, at least, that's for sure. Up almost 1% on the S&P. Abby, thank you. As always, your trading diary up next.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Six minutes in, equities up 1% on the S&P, yields climbing too. Chairman Powell just moments away. Here's the trading diary. Chairman Powell testifying on Capitol Hill at the top of the hour. Then President Biden discussing infrastructure a little bit later, 3:15 this afternoon. Another round of jobless claims coming tomorrow morning, plus more Fed speak. Barkin, Williams, Chair Powell heading back to the Hill for a second day of testimony. And we round out the week with the payrolls report in America. The estimate right now, the median estimate, about 403,000. From New York, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349.